The companies you're about to hear from have paid for the production of this content. The host personally owns shares of multiple of them, and he may buy shares of the others without prior notice in the future. The Or Group's chairman has a non-arm's length relationship with a person who has a financial interest in a company that owns this channel. This is a broad, general, and impersonal piece of information intended only for those who know and understand the risks of junior mining, of which there are many. If this isn't clear, go to the last section of this video for a longer explanation, and do not consume this content if you don't agree with everything said therein.
Today on Resource Talks, we're doing something different. And this time it is kind of different, although it's partly the same. The Or Group has asked me to be the host for their Pre-PDAC VIP lunch event, although they asked me, so I wonder how VIP this thing's really gonna be. Initially, I didn't want to do it because most of the times these things are nonsense. You know, CEOs get a half an hour, 45 minutes stage time to talk to a bunch of, or well, really only a few people because most of them are sleeping at that point, and there's not much more than promotional nonsense. But the Or Group said I had some freedom with this thing, so instead of giving them a half an hour or even 15 minutes to present, they only get about half of that. They get 8 minutes, and I'm going to interrupt them when the 8 minutes has passed. If they want to keep talking after that, they're going to have to fight me on stage. No, I'm kidding. If they want to keep talking, they can do so in an interview with me for 10 or 15 minutes on the back of that, where I can push back, ask follow-up questions and whatnot. And we also have a keynote speaker, but it's not the same guy who's been, you know, writing the same stuff for 75 years. Gold's going to go to the moon. Therefore, somehow the in situ value of your bags is going to be larger than zero. None of that. We have someone who actually makes money in the market. His name's Tom Woolrych. He's an Aussie geo turned fund manager who now works for Deutsche Rohstoff over in Germany, and he's going to talk to us about Geo Alpha. So he's going to tell us which of these companies he likes, which of them or why he likes them, and he's not being paid to do this as far as I know. So for all I know, he's going to tell us he likes none of them. So that should be fun. And yeah, I think that's about it. It's going to be, I think, 3 hours or something along those lines is what the presentations are going to be, which means that it's time for me to stop my yapping and welcome the chairman and founder of the Or Group himself, Stephen Stewart.
First thing I want to say is that everybody who does come up here and represent the companies, the CEOs, the leaders, I want to say that each of them are the top of what they do in my book. And I think that's core across the Or Group. It's all about people. Each of them have high competency, high integrity, they're motivated, and they're well aligned with shareholders. And that's something that I learned very early on, and that's our tagline at Or Group. It's people, property, and capital, and we have all three things there. So yeah, all about people. So my talk, I'm going to keep it very tight as Antonio is policing us, but my talk here is really just about the market is awake, and that's sort of a play on words. It's the opposite of woke. I don't mean to be too political. It's not a political statement. It's really more about reversion to the mean. And everything is cyclical, from the heavens to the markets to cultures, moods. They all ebb and flow. For every action, there is a reaction. And lately, those cycles in the market have gotten out of whack, in particular in the metals. But if you strip out the noise, it all just comes down to one thing. It's about, again, people. That's the theme, and their emotions. And while we can't model people and their emotions because people are irrational, and people are strange, we know this: when things get stretched too far, they snap. Reality shows up, the pendulum swings, and things again revert back to the mean. And you can see that in our space. We have been so down for so long, but things are clearly changing. The TSX above 1,000. Let's talk about gold. I think gold leads everything. It's what got me into this industry, and I don't want to be too alarmist about what I think is driving gold, but put simply, it's war. And I even wrote this yesterday, but you know, gold is acting like we're heading for war. Maybe we're already there, but it's clear that the precious metals correlate with conflict and distrust. And when there's war, the governments, this is the key part, the governments don't want paper and promises, they want certainty. And gold is the only sure thing. And the metals, you know, they don't necessarily reprice on one day. We're not going to see, well, maybe we will, but I bet, you know, Monday, After what's going on in Iran, gold will go up, but it's not going to spike, $1,000. They reprice when the signal becomes totally undeniable, and I think it's clear that it's undeniable. War, unfortunately, is everywhere in the Ukraine. In Europe, who thought Europe would be at war? Middle East, Asia, even here at home. It's not necessarily kinetic here at home, but one could argue we're one misstep away from that happening here. And in certain times, again, people reach for gold. So that's why I think gold is really through the roof. It's over 5,000. It's really quite remarkable. And I do think that it's reinforced by debasement. That's sort of the common narrative is, simply put, money printing. There's no question that's there. And people have woken up to inflation. It's real. It's a true story. Yesterday, I bought a turkey sub from Subway Sandwich. It cost me $20 yesterday. It was a terrible sub too, but $20. So, the precious metals, again, that's what people reach for when they no longer believe the unit value of price. The price, what does anything cost? Nobody knows. And then beyond gold, all right? We at the Ore Group, copper, nickel, uranium, we like all sorts of metals. Call them what you will, critical, industrial, base. They're all things that go into widgets. And those have become now not just an economic thing, but a source of national security. And the issue is security of supply. We have to get our hands on the metal. If you remember, during COVID, wasn't too long ago, we learned that supply chains weren't guaranteed when we couldn't get our hands on toilet paper. The same thing now applies for copper, nickel, uranium, rare earths, and frankly, all of the metals. These are the inputs that keep the lights on. These are the inputs that keep our factories running. So what are we going to do about it? Well, down south, they're stockpiling, like they've done with energy for decades. And how are we going to feed the stockpiles? Well, we're going to have to start financing and building the project on this continent. And that's great news for Canada. Great news for Canadian juniors, great news for the Ore Group. This is what we've been waiting for. We have been positioning ourselves with a bet on Canada. And it's not just going to be about the IRRs and the NPVs, which is how, analysts and smart people like Tom probably evaluate projects. But now it's going to be about capital being allocated to ensure that we have the metals where we need it and when we need it. This is the playbook from China. They have understood this for decades. They own the metal. They build the infrastructure, and then they think in terms of decades, not quarters, not mark to market, where we in the West have become complacent. I call it fat and lazy. I call it woke. But really, it means we've been asleep at the wheel, and that has consequences, and we're paying that tab right now. The valuations have gotten so distorted, in my opinion, both up and down, and certainly down in the metal space. Look at tech. Those valuations are crazy. The crypto phenomenon. Everything's been propped up by financialization and what I call false policy, with price drifting away completely from fundamentals and value investing being deemed dead again, but it's not dead. But there will be a hangover from all of the policy, the false policy, the 2008 ZERP, COVID, extend and pretend, and when that hangover hits, it's not going to be gentle. It's going to be a major repricing. So that's, that universe does exist, and I think we're sort of on the precipice. So what are you going to do about it? How are you going to protect yourself? How are you going to invest? How are you going to make money? What are we doing? Well, we're placing our bets here in Canada. As we've said, Ore Group is almost exclusively, except for our good friend, Mr. Chubb and Awalé, almost exclusively in Canada, for good reason. But Canada's going to have to change its tune on permitting. We're not just going to have to revise the way we do permitting. It's going to have to be torn down and revisited. These 20 to 30-year timeframes that have become commonplace, the death by consultation, that will not survive in the world that I'm talking about. If we are serious about security of supply, these projects need to get built in years, not decades. That's what has to happen. But there's good news. We know how to do it. It's easy. And we can do so sustainably with world-class engineering, monitoring, reclamation, consultation with communities, First Nations, no problem. We know how to do that. The obstacle isn't capability, it's a culture of veto, and that's a political statement. But there's far too many groups that have built lucrative business around delays and obstruction. And let's be honest, this obstruction is rarely just about the environment. It's about money, usually always is, and power, about who gets to say no, and what they can extract for saying yes. That's the problem. And this veto doesn't just block mines, it vetoes prosperity, competitiveness, because capital flows to the path of least resistance and security. And what do you do about it? Well, I think you should get up and speak up. And we got to call this out. We got to make a change for Canada. My last point, as I'm going to wrap it up quick, is this Canada versus the United States, which, it's sad. I hate being having the narrative that we're adversaries with the Americans. Forget it. It's bollocks. To be clear, we are brothers. We're families. We're brothers and sisters. We're joined at the hip from the very beginning, and that was not going to change. Like family members, they'll be fighting, and there'll be volatility and posturing and more cheap shots, make no mistake, but we're going to kiss and make up. We're going to reconcile, because this alignment is structural, and the partnership is very, very straightforward. Canada is going to supply two things: energy and metals, and we're going to ship it to the US, who are going to reindustrialize, reshore their manufacturing sector in the heart of America, and reinforce their status as the global economic leader and the global security leader. It's very simple, and it makes sense, and that too will revert to the mean.
Now, before we hear the actual presentations and before I go into the interviews, I want to ask Tom Woolrych, who's an Aussie geo turned fund manager and now works for Deutsche Rohstoff over in Germany. He's been doing very well over the last couple of years, but I want to ask him how he watches presentations and what questions he asks when he talks to management, so that we're prepared and know what to look out for during the rest of the event.
Yeah, I guess if you don't already know the story, it's going to be difficult, isn't it, to dig into these things in detail. So if it's a new story, probably focus on, predictably, you know what I'm going to say, focus on the drilling, see if they've got, what you might consider all grade hits, if they've got the elusive 100-gram meter intercept. That's going to be a big help.
Is that still a thing, or is it always going to remain a thing? The 100-gram meters, is it different in this kind of pricing environment?
That certainly is. For me, it's still important, because I want to be invested in only the best things. We've got too many stocks in the portfolio, so for me to add something, it's going to have to be pretty compelling. It's going to have to be better than what I already own. So yeah, I still think you need, in quote, all grade. Mm-hmm.
Is it always ore grade when it's 100-gram meters? Like, what if it's 100 grams over a meter? Are you still interested?
No, it's too narrow. Yeah, so minimum mining widths and heights are sort of 2 meters, so that 100 is going to be pulling in a meter of waste as well. So yeah, I'm not that impressed by less than 2 meter width.
Right, okay. When I'm going to do interviews after each presentation as well with the guys, what should I be asking them as kind of a quick gauge? I don't want to hold them here for half an hour for a normal length seagull barbecue, so
yeah.
That's the first. So when they sit down, I say hello, and then I say, what's the true width?
Yeah, what's the true width? Yeah, and then if they start squirming in their seat, that means they might be drilling down dip, doing infills, the classic trick.
Okay. Do you care about oriented core?
It depends on the stage. Later on, it becomes very important. It's expensive. It's slow. So maybe if you use San Lorenzo as an example, at that stage, it's not that important. They just need to get meters in the ground. In fact, I'm telling them to drill RC, right? So you just need to get data back. Later on, it becomes important, particularly if they're structurally controlled deposits. It becomes very important. And then also for engineering type stuff.
Mm-hmm. So maybe a question should be, what are you drilling? So are you drilling DD or RC or AC? Yep. And why are you drilling that? Is that a good question?
Yeah, I mean, there could be a multitude of reasons. I guess focus on, are they drilling appropriately for the stage of the project, for the style of mineralization? Is it narrow? Is it disseminated, wide hits? So no one hard and fast rule.
But they should be able to explain why they're doing what they're doing and not just doing DD for the sake of the market or something, I suppose.
Yeah, I mean, I guess they're always going to have some sort of excuse. You know, it was a met hole or it was a geotech hole or something. You know, there are legitimate reasons for drilling infill or director special type holes. That's fine.
Yeah. Those are good questions to start off with. You and I should do a longer podcast and talk jurisdictions as well, because you've had some travel as well. You went to Colombia and whatnot. Most of these companies are in Canada, though. Awalé is in West Africa. I know you like Awalé. I know you like Metal Energy.
Yeah.
What else do you think of the Ore Group companies? What else is kind of intriguing you? What are you skeptical on?
Oh, I don't want to talk about it. Stardust, 15 million market cap. You know, it's sitting in a pretty compelling part of the world, next to large, fairly well-known deposits. That just feels massively undervalued at the moment. So, I'm going to have to do more work on that. But that really stuck out to me today. It was, and you'll see later, the Stardust presentation.
Yeah. What about American Eagle? I mean, you were skeptical on that. I remember you and I spoke about it, and over time you were kind of skeptical of the geology. They just got some money in from Eric Sprott, so they're cashed up and everything. So yeah, what do you make of that story now?
Massive. Huge congratulations to the guys. You know, they're some of the hardest working people out there. And you know, Tony, he gets the story out and he gets the cash in the door. So he's really winning. Haven't modeled the hits yet. So yeah, maybe if we do talk again, I could spin an American Eagle model and we can see how it's grown.
Yeah, that would be good. What are you looking for there, though? Is it just the grade? Is that kind of being your main concern?
Yeah, that was, you'll probably remember, was it with you? My original criticism was that they were drilling sort of 50-meter step outs on a porphyry, right? So that's a good example. That's not an appropriate step out for porphyry. The target is billions of tons, so they need to be drilling 200-meter step outs. And I was just saying to the guys, well, why are you doing these, micro step outs?
Yeah.
And or infill even. They would argue that they needed more data to understand the system and that it was appropriate. But my view was that it was good ground. You can cover more ground quickly if you sort of take a grid style drill to kill approach. They didn't want to do that. Tony was managing the shares outstanding extremely well. I think if you've got a tiger by the tail was the comment, then you need to be systematic. So yeah, good on them. They've done really well. I'll look closely at the hit from last night.
What do you make of an investment vehicle like Orecap? I mean, that's not something you couldn't model that. You would have to model all the different investments or something like that. So that's less interesting to you, I suppose. What do you make of that?
Stephen. He's made a point. He's made the point to me that they're trading at a discount to their NAV, right? And their investment portfolio has a lot of momentum behind it. So look, at some point that discount just becomes too great. The market's going to have to start bidding up that stock as well. So Deutsche Rohstoff suffers from that a little bit as well. It's just these vehicles that you never get 100% of your NAV.
A lot of these companies are cashed up now, as we've discussed, but is that something you put in a lot of importance on as within your geo alpha model? Is that even within that, or how much importance do you put on being cashed up?
It is important, because if you put out good hits and you don't have cash, the market sees you as trade income raised and they won't bid you up. They think, well, I can just get money in the next financing, or the next financing will set a level, put my buyers in a few cents above that, then I'll get some on market. So it is important to have, at least bluff to the market that you have the cash to be able to execute your programs.
Yeah. What about other stuff? I mean, in terms of geology, your metallurgy and structural controls and all that, is that something you would start looking at a later stage, or depending on the stage of the company, or when do you care about these things?
Yeah, it's not part of my edge, to be honest, but water is one. If you get a bit of pit, understanding the geotech so that you can adjust the pit walls appropriately. The angle of the pit wall has a big effect on strip ratio, right? So you want to get that right. So it just needs to be done. It's not sexy work. It's not going to pump up the share price, but just part of what has to be done.
Yeah, fair. We're all fighting jet lag, so I'm going to let you go and get ready for the presentations and everything. But thank you so much for doing this, and we should sit down and talk about your traveling adventures sometime soon.
Yeah, it'd be my pleasure.
So you now know how to listen to these presentations, and the first one we're going to hear is American Eagle Gold Corp, which is a copper gold explorer who's currently working on the NAC project in British Columbia's Babine Porphyry District, backed by strategic investments from Teck and South 32, as well as of recently, Mr. Eric Sprott. Now, it's Anthony Moreau, the company's CEO, that was going to be telling us more about that.
So our company's American Eagle Gold. I always say this, we sell dreams, not jeans. Remember the symbol. We talked about alpha earlier. What is alpha? Alpha is the edge. It gives you the advantages over other portfolio managers. People like Nate Smith, Daniel Vrand, Rob Ringrose, they have alpha. Why? Because they know our name. A lot of people don't. This is where we're located. It all starts with the CapEx. How can you pay back the capital as soon as possible? You're in a location like we are, not dealing with hills, good First Nation support, near people, energy, etc. It's a great slide to start on. But guess what? That alpha is disappearing because somebody came to the party. Welcome to the family, Mr. Sprott. So we did a deal yesterday. We raised $23 million, charity flow through. The investment, 9.9%, all went to Eric Sprott. This was no clubhouse deal. Nobody else got in, and nobody else would be allowed in at those terms. But when the dawn of discoveries, the godfather of gold calls you, you answer. My wife always gets mad at me because I never screen my calls. I pick up every call, whether it's a telemarketer, etc. This is one of the few times it actually worked out. Picked up the call. Who is this? This is Eric Sprott. I almost fell over. It was like 7 o'clock in the morning. And he's like, I love your company. And I absolutely love it. I go, Eric, I thought you were interested in gold companies. He said, for you, Tony, I'll make an exception. This is a great copper porphyry. And I was sitting on the beach in Anguilla with sand beneath my toes. And I said to people I'm having breakfast with, do you know how far 620 meters is? That's all metal. And he said, guess what, Tony? Maybe you don't realize this, but with 0.42 gold grams per ton over 600 meters, that's almost just a gold mine. I love it. And I said, okay, Eric, let's talk during the day when the stock starts trading and maybe we can do a deal. It'd be great to have you in. But talking about alpha, now that Eric Sprott is invested, a lot more people will know about our company. And that's a really big difference for us. I think we have a potential mine. That's the whole name in the game. But we want to get to a price where someday we are comfortable selling this. And we have to do that soon. And I believe on Monday and next week, a lot more people are going to be pressing the buy button because they didn't know about this. And there's a lot of companies I think we have to catch up on. And forward-looking statements, I wouldn't be surprised if we can get to $1 billion valuation in the next 18 months. That is my goal. And my wife always says, set lofty goals because you're going to hit them. So $23 million at $1.20 per share, 9.9% equity stakeholder. One of the few copper plays he has invested in. And it's priceless exposure. It brings a lot of other funds into it. Funds follow Eric. So thank you, Eric, for investing and believing in us. So what's NAC? NAC is a copper gold porphyry. It's right next to Smithers, BC. It's about 85 kilometers. 10,000 people live there. You can drive there in about an hour and a half. In the winter, you can just drive a Ski-Doo right to the property. It's got access to power. It's got access to people. But the geology is really the great thing. It doesn't matter. What we have here can work in the mountains. It can work where we are. It's got grades. It really got a really high grade area in the south zone. But also it has scale. I'm not a mine builder. Mine builders have problems building mines. We want to make discoveries. We want to set this up for a mine for someone else to buy it someday. So that's a really big key for us. But for a company to buy you, it's got to be big. It's got to run for multi-generations, 50 to 70 years. And what we're starting to find out here, this has massive scale. When I say scale, again, forward-looking statements, I wouldn't be surprised someday if this can get to 3 to 4 or even more billion tons. So not only do we have Eric Sprott involved, but we have Teck, who's a 13.3% equity stakeholder, and they gave us a lot of credibility. And we also have South 32, that's a 19.9% owner. They actually came in at 87.5 cents in November 2024. And we thought that would kind of put us on the map, but people want the gold writers, they want a big fund, or they want one of those big speakers to invest, and there is no one better to put you on the map than Eric Sprott. So we accomplished that next goal, to put us on the map, to people know who we are, so they can actually make a decision whether or not to buy us. So we put out 3 news releases, one the Eric Sprott investment that was on Friday. Friday morning, we put out a great hole, 618 meters I talked about before, 0.77% copper equivalent from surface, 0.42 grams per ton gold in there. We have something called the South Zone. That is what we call right now our center of gravity. For now, we think we will find other center of gravities throughout the property. But I mentioned earlier, it's all about paying that CapEx back as soon as possible. And you have that with a high-grade area where you can pay back the mill and the infrastructure. And it allows a high-grade mine to turn into something like a Highland Valley, where you have moderate to lower grade that you can mine profitably for years and years and years. And we had another release that came out a few weeks ago, 802 meters of 0.7% copper equivalent from surface. So some amazing holes, and we have about 20 other ones like that there. So we believe that South Zone could kind of carry American Eagle on its own, but the icing on top is a massive scale that we have. So that's a picture of the South Zone. It's about 500 meters by 700 meters by 800 meters. You can do the math to kind of figure out the tons there. Those are some of our highlighted holes that you see there, hole 80, hole 78, 41. Absolutely amazing. But again, there's a lot of noise out there. A lot of other CEOs like me that say, I have the best and the brightest. So it's hard to figure out which company to invest in. But once Eric's in there now, people are going to be doing their research and seeing a lot of the stuff that they missed in 2022, 2023, 2024. But I still believe that we're significantly undervalued.
That's 8 minutes, Tony.
Wow, that went quick. Okay, here's a scale right here. This thing's big. It's only getting bigger. We got a lot of opportunity to drill. There's a lot of open areas we haven't drilled yet. Our drill program next year is essentially going to be the biggest program that we've ever had. We want to drill all the way through to 2027. My goal is to prove to the market, prove to our partners that this can be a tier 1 deposit. And my goal is to get this over $1 billion valuation, like XXIX Metals, like North Isle Copper. I think they are one of our peers, and that's a big target of mine to get to. Thanks, Antonio. I have 10 minutes, right? 8, okay. Okay, let me just finish this, Antonio, really quickly here. Okay, we start drilling in less than 90 days. The big thing about Eric Sprott coming in, usually when there's no drilling, people sell off because there's no news coming up. Now we have some tailwinds, so that's a big advantage of us. We won't be going down towards May when we start drilling. I think we'll be going up. And good First Nation support. Teck and South 32, I'm really fast forwarding here. And we have a great team. The foundation of the Ore Group and American Eagle Gold is our team. Gord Stothard, who's on our board, is right here. He helped to build he was the chief engineer at Bell and Grand Isle that's right next door. And those are all the Ore Group companies. Sorry if I went over.
All right, Tony, I'm asking everybody the same questions, and the first question would be about money. I know you have a lot of it, but then more importantly, what are you going to do with it? And then really even more importantly for you is when I was at NAC last summer, I asked you, is this it? Like, is this money going to be enough for you to prove or disprove the thesis? And you said, yeah. If we don't prove it with this money, that we couldn't prove the thesis. So now you have, or you're going to have, when this deal with Eric Sprott closes, you're going to have a lot more money. How do you make sure you're spending it wisely and not wasting it given the amount of money you have?
It's the culture. It's doing what you've always done and remembering and being humble when you had no money. So I talked to Neil, our VPX, and Charlie today, and I said just because we have a lot of cash, we're not going to be any less judicious with how we spend it. And it's about putting as much of that money into the ground. The only difference is we're putting more money into the ground this season and that. So we did about a 30,000 meter program this season. 2 rigs for most of it, then we transitioned to 3 rigs. think it's pretty safe to say we'll probably do a 3-rig season going all the way till December. So we'll have more meterage that we put in the ground. So we have around $60 million in cash, which is great. And you always ask about G&A, so I'll ask it for you first, Antonio. So I think the interest that we have coming out of the bank will almost double the amount that we spend on G&A. And I'm the only full-time person at the company. All of our other support, finance, legal, is split with other companies. So if you look at exploration dollars put in the ground as a ratio to your G&A, I think we probably have one of the best ratios in the business. And yeah, I did tell you that we probably wouldn't have to spend money again. But why are you spending money? Why are you exploring? We're not in the business, us, that I think we want to build a mine. We want to discover it, prove that it can be a mine, and set it up for someone to eventually buy it someday. But the thing is, we don't want to sell at $1. We want to sell at $3 or $4. So to get to that price isn't just about making a discovery, having great holes, which we've done. It's about people knowing who we are, which I think it's still a lot of people don't know who we are. So that money from Eric Sprott, yeah, it's great to have an extra $30 million, but it's not just the cash that he gives you, it's the attention that he gives you. So now maybe you're not just dealing with 5% of the junior mining investors out there know who you are. Now maybe 50% know who you are. So that helps bring your stock price up just as much as a great drill hole, and it reduces your cost of capital, and it allows us to really extend our season and increase our drill program. So that's really the importance of that money. So you are right, but there's a reason why we did it.
Are you going to spend more money on marketing now that you have it?
I think smart money, but I think just because you have more money doesn't necessarily mean, like, in this business, I think one of the problems is people just throw money at marketing, and it's a bit of a cottage industry. And like, we look after all of our marketing. Like, I live and I sleep American Eagle, and I do our Twitter posts. Like, we do a lot of this stuff, and then we do smart hiring of people. So like, we work with you, Antonio. INN, for example, is a good tool that we use whenever we have big news. We pay money to get that out to a mass amount of people. On our newswire, we make sure we hit Asia and Europe. So that's kind of spending we do. But I think it's just good old-fashioned boots on the ground, making exploration. And look, we could spend $10 million on marketing, or we can do a deal with Eric Sprott, and that kind of does the marketing for yourself. And I'm guessing Eric's going to talk his book and talk about us. There's no better marketing machine than bringing Mr. Sprott, the godfather of gold, into your deal. And if you look at the deal, it's a fantastic deal. Eric is a long-term holder, rarely sells the stock. He's a sticky investor, so he's very similar to Teck and South32. When you bring him in, he's not going to sell. And it also brings that extra exposure. And South32 and Teck, I thought they're really great investments. I think it gives a lot of technical credibility. But this one's going to attract a whole different amount of investors. People follow what Eric Sprott does, so that's really important.
Mm-hmm. The grandfather of gold investments, American Eagle, is mostly copper. How come?
We also call him the dawn of discoveries.
Okay.
Yeah, I coined that. Steve coined Godfather of Gold.
I was going to say it sounded a little messed, a little made up, but I'll take it.
So yeah, American Eagle Gold. So we started off in Nevada. We started off with gold, and that was the name of the company when I came in. I didn't name it. I don't mind it. It has a good ring to it. And we had thought about changing the company, and I think when we took on NAC in 2022, and I told you we still didn't have a lot of money, and it cost about $50,000, and that's a lot of money when you only have about $900,000 in the bank. And we thought, is it better off changing the name of your company, or is it better off putting an extra $50,000 of drilling into the ground? And we decided that the latter was more important. And then things kind of turned out for us, and our stock went from 2 cents to now it's close to $1. And I think, why change something that's good? Instead of changing your name, I think it's better to make sure you have good results, so people will find us. But yeah, look, can we change it? We'll probably maybe change it to American Eagle Copper or Copper.
Well, I was mostly thinking, not really name change. I was mostly thinking, what is Eric Sprott doing buying into a copper story?
Okay, good question. It was one of the few porphyry companies, copper companies that I know of that Eric invested in, which is super interesting. He actually called me. So he called me the day we did the deal. That deal happened in deal happened fast as any deal could.
Because you had that. That's actually might be a good point as well to talk, because you had news pre-market maybe on that day or early on in the day, and then aftermarket you had the financing announced. Has this been in the works for a while? Did he call you on the day off? What happened?
Called me during the day when we were trading. It was like things move fast, really fast. His team's really good, and he called me and says, I don't really invest in copper. You guys are different. I love those results. He's gone on a vacation living in the Caribbean, and the two things he said that really resonated with me. He said, I saw your drill results, and I was with some friends at breakfast, and he said 618 meters at 0.77%. He goes, Tony, he goes, I was asking people, do you know how far 618 meters is of metal? And he goes, that really attracted me. And he also said something else to me. He said, you guys have a lot of gold. He said, I was doing back of the envelope calculations, and I calculated 5 to 6 million ounces of gold. So we are more of a copper play, but gold is in our name. But if you look at it, we also have a lot of gold. And the one thing that I looked at, which Eric brought up, was if you look at that intersect that we had, the 620 meters of 0.77% copper equivalent, of that is 0.42 grams per ton gold. Now that on its own, you're coming kind of getting close to that. Is actually almost just by itself an economical, mineable area. You're seeing a lot of deposits in Nevada, et cetera, that have about that grade. So to have that copper kicker and silver and moly is really great. So I think that's kind of the reason why he liked the size that we had as the porphyry, but he liked how much gold was there too. Yeah,
that hole that you had, it didn't look like it changed much for the story for people who've been following it for a while though. But it did kind of open the door for him. Or did it? Did it change something for the story? What does the hole that you announced before the financing, what does that do to the American Eagle story?
Well, I think it was a combination. I think what got lost in that news was we also had hole 73 and 75. So that southern area, it's about 700 meters by 500 meters in length and width, and by 800 meters depth of high-grade copper and gold area, call it 0.4% or above equivalent throughout that whole zone. But when we hit 73 and 75, you pretty much extended that area about 750 meters to the east, and there's only 2 holes there, but it's just showing that there's continuous mineralization. So I think that's one of the reasons too people kind of looked at it. We put that drill hole out 2 days earlier with I think it was hole 70, 900 meters of 0.43% copper equivalent, and that also rocketed our stock up 20%. So it was kind of a combination of people realizing this thing has scale. But I think when people saw that hole, so that hole we came out with 78, 900 meters of 0.71%, sorry, 818 meters of 0.71% from surface, and it was going from the northwest to the southeast. This hole 80 was going from the northeast to the southwest, and it almost kind of scissored 78. And when you see that mineralization almost exactly the same, you realize that it's a continuous area, just a whole block of metal. So I think it just confirmed what people thought might be there with 78. So that's probably the big difference there. When people saw 78, they're like, is it for real? Are they going down a vein? But when you have a follow-up hole that goes across, you're like, yeah, okay, that's a big block of high-grade metal. That's the big difference.
Are you going to change the drill program significantly now that you're going to have more money from a step-out perspective? Do you want to do more step-outs or look for new discoveries maybe across the package?
So I think about, now that we've done the step-outs this year, like this year we're doing step-outs, like there's been no holes there, so you don't really know where you're going. But now that we've done about 10 step-out holes, we can model it. In 2026, a big portion of the largest portion is going to be towards the step outs. So if we're doing a 30,000 meter program, for example, we'll probably do more. I would say about 8 to 10,000 meters will be to continue to build out that south zone. That's where we think right now the mine will start. And then put between 20 and 22,000 meters to the step outs, the porphyry stock, all those open areas that we haven't drilled to kind of bring together this whole continuous ore body. Because I said in the speech earlier, it's kind of similar to Highland Valley. Highland Valley started with a high grade area, They paid off the capital, and they could just mine their moderate to low grade pretty much forever and make a profit. That's kind of the model that we're trying to do at NAC, and it's looking like this thing is just a big area of mineralized continuous rock, continuously graded rock. Obviously, some areas of high grade, some areas of low grade, but there's only one hole that we've ever drilled that hasn't come up with copper and gold, and it was 2 kilometers to the southeast, not in this prospective area.
What are you going to do in terms of spacing? Is that something that's going to change, or are you still thinking 50 to 100 meter spacing for the drilling?
We don't do 50 to 100 meter step outs. This year, like that 59 area is 700 meter step out. But this year, if you look at our map, I think what we're going to do is we do a grid. So it's like, let's go for it. We got enough money to make some mistakes, not mistakes, but to miss. The expectation is to miss in this business anyways. We haven't done it very often. Do a grid, do about 20 to 25,000 meters, and just do 200 meter step outs. And try and hit that entire area that we haven't drilled, and hopefully really understand how this ore body is and have the market understand it too.
Yeah.
So that's what we're gonna do.
What's your catalyst calendar looking like for 2026? When's the next news release going to be? What happens after that, kind of month by month, or I don't know, week by week?
Yeah, so the last 4 drill results just came out. There's always a bit of a lull. Like right now, like we gave out news till almost March, so we had a longer season than most other BC companies. But still, there's 3 months until we start drilling again, a little bit less than 3 months, and then probably a month and a bit after that till you have news. So you got probably a 4-month off season in terms of catalysts. That's why the Sprott thing is so important for us. Yeah, the stock went up, but historically what happens, usually it softens a bit because there's no news and people go into other things with catalyst South American plays. But this Sprott investment, which is great, it gives us tailwinds and momentum into an off season that otherwise usually is a little bit softer. So that's a catalyst I think that can carry us for many months until we come out with our first piece of news. In terms of other catalysts, we start drilling in just less than 90 days, and we'll be starting at least a 30,000 meter program. And our other catalysts, just I'll let people know where we're going to be drilling. What's our drill plan, and then have people look under the hood, look at our model, try and understand it. So those are catalysts that are coming up. But I can always surprise people.
That's an interesting note. You think you couldn't anymore? I mean, there's plenty of people. Is there room for more big names or other? I mean, it almost seems crowded on the registry right now.
Well, we're not bringing any more investors in right now. Like, we're not a fund. We have enough cash. Now we have enough cash to bring us to the end.
You'd say.
I'm very confident of that. It's a race against time for us. It's like, you know, we got to prove this thing out in 12 to 24 months. I believe that there will be someone that's going to come in. It's like, I don't want to sell at $1. I want to sell at $4 or $5. So how do we get the investors to understand what we have to give us value for it and start bringing those funds in? I think Sprott, thankfully, his investment is going to bring some funds in to take the investment in us, which is a big thing.
Yeah. Good. Well, that's it, Tony. I know you have the YMP event right after this, so I'll let you do your thing. But thank you so much for doing this, and good job.
Thanks, Tony.
Moving on from BC, we're going to take a faraway trip into West Africa. We're going to go to Côte d'Ivoire, and we're going to hear from Andrew Chubb, who's the CEO of Awalé Resources, one of my personal biggest holdings, and a company who made one of the highest grade gold discoveries in Africa.
We're in Côte d'Ivoire. We're a big landholder. We've got just under 2,500 square kilometres. Most of that is granted. There are only 2 permits that are not granted now. And we've made significant discoveries on this project so far. So we've got 4 significant discoveries. 3 of those will be going into our mineral resource estimate coming out in April. We've recently completed we've really got up and running with drilling in November. We've completed just over 25,000 metres of drilling since then, and we're still drilling now. We've got 100,000 metres of drilling planned for the project up until the end of this year. So along with the MRE, there's just going to be plenty of results flow and catalyst for the company, and that's really started showing this year. We closed on Friday at $1.15. And so we've had about 15 to 20% rise in the last month. And so what we're talking about here is district scale potential. So we've really only started scratching the surface in that we have got 2,500 square kilometres. We've really only explored heavily in about just over 400 square kilometres. So we were the first movers in the district. We pegged the belt, and we're just starting to move out into those permits that are along strike from our discoveries. We've had some early stage drilling programs in those and had some early stage hits as well. And a final thing about us is we have got a fantastic register. And with Newmont on the register with 9.5%, Fortuna Mining has got 15%, Franklin Templeton and others that you can see there. We've got a really strong register and only 105,000 shares outstanding and 130 odd million fully diluted. So we've got a really tight capital structure. We're well funded. We've actually got $13 million in treasury right now, which is funding our 100% exploration, and Newmont is actually funding 100% of the feasibility work that we're doing right now. So as I mentioned, where are we headed? So April, our first mineral resource estimate. That'll be quite quickly followed in Q3 by a PEA. And then in moving into 2027, we'll be completing a PFS. And actually, we're scheduled to be applying for a mining permit in 2027 as well under the Côte d'Ivoire regulations. So we've got a rapid program ahead of us with lots of drilling. We've got a fantastic team in place to achieve those goals, and so we're looking forward to that first MRE. We're looking forward to the positive PEA, and then on our 100% ground, we're looking forward to making discoveries on that ground in the next 12 to 18 months as well. So just a quick drill down on a couple of those discoveries. Charger. So, you know, we say it's a district, we are on a large plumbing system. And so what we're on the iron oxide copper gold spectrum. With these intrusion related body mineralization that we've got. And we've got, so the Charger discovery is an incredibly high grade gold discovery. The BBM discovery is a gold and copper discovery. It will provide the backbone to our MRE at BBM. And then Empire is another high-grade gold discovery as well. All of these discoveries have a slightly different local flavour, but we can tie them together in it's the same fluid system that is causing the mineralisation in these locations. They're all quite close together. They're within 10 kilometres of each other. And it is a really exciting play for us. So a quick drill down on a couple of those deposits. BBM, so all these discoveries are near surface. So they're open pit discoveries with underground potential. So BBM, the zone that we've defined there where you can see that BBM drill area, we've defined a 1.2 kilometre zone in there, which will be part of our first mineral resource estimate. It is, I often call it like a gift in that the mineralisation is incredibly robust, consistent. It's exactly what you want to see as a geologist. So and we have now drilled it down to an initial open pit depth, which we estimate at 300 metres. And just recently, we've started chasing it down plunge. And our most recent results are showing up that down plunge mineralisation, which I'll show you on the next slide. So this is a long section through that BBM where we're looking, so it's cut straight through the middle of that deposit. And so we are getting So just recently, that whole BBDD20 was 38 metres at 3.3 grams gold and 0.5% copper. So it is showing that there is underground potential, and we're now pushing to drilling that to 600 metres below surface. The top 300 metres is what we're looking at as an open pit. The true widths within that, so in those hot colours, we're looking at 30 to 40 metres wide in true width, and then moving out to sort of 10 to 15 to 25 metres wide in those outer yellow and green zones. So it's incredibly robust mineralisation, and we're targeting at least approximately 1.5 million ounces gold equivalent in that initial open pit, and then chasing that down plunge. Getting those over 100 gram metre gold equivalent intercepts means that it's absolutely open at depth, and we can keep chasing that mineralisation down plunge. It's a really nice deposit, and it will provide the backbone of all the mineral resource estimate for April. We just talked about Charger before, incredibly high grade hits. We've got multiple hits at over 500 gram metres within that Charger deposit. We've now started systematically drilling that down to 400 metres below surface to become part of that first mineral resource estimate. Again, I'll just show you a long section, which is along that line LL through there. So we're looking at that purple there is plus 10 grams per tonne in the drill intervals. Just recently we drilled 9 metres at 52 in that hole 3. And look, it is a little bit structurally complex, but it's a steeply dipping system, and it's like a ladder. And you get these footballs of incredibly high grade, thicker zones as you move down the rungs of that ladder. And that hole 3 is potentially showing up the next rung in that ladder at Charger. The other thing is we've just got some early stage hits about 200 metres to the southwest, and what we're calling Charger 2. And we got some initial 10 gram intercepts, shallow intercepts at Charger 2, and we've got the drills following up that mineralisation at the moment. So we've hit mineralisation in 3 holes at Charger 2, and now we're chasing it down depth as well. So I talked to you about the regional play. We've got an $8 million Canadian budget towards the regional play at the moment. You're looking at the recent mag that we've done. That Fremen target in red, we've already got some early stage drill hits there on extremely broad space drilling. It could be our next discovery down there at Fremen, and we'll be also coming up to those other permits to the north with drilling later on this year. So we think there's a high probability of following along those trends of making discoveries in the Awalé 100% ground as well, which would be another significant catalyst for the company.
That's 9 minutes. You got 1 extra because I'm biased.
Oh, there you go. So look, there's the team. We've got a really strong technical team. We pride ourselves on the geology and the work that we do. And we're really poised to bring it, we will be bringing that mineral resource estimate through in April, and the feasibility studies to follow. Thanks very much, everybody.
All right, Andrew, let's kick it off with money. You mentioned during the presentation, 13 million bucks in the bank. That's all hard dollars and everything. There's no equity or anything. What are you going to do with that money?
We're going to spend it on the 100% ground, is what we're going to do. And yeah, that's about where it is. We'll spend it on the 100% ground. So we'll spend about, by the end of this year, we'll have spent about 8 million of that. We're, sitting quite well at the moment. So we should, I hope, get some warrants in as well, sitting at over $1. So
how much money would that be?
Just under 9 million Canadian.
Okay.
So if we got 100% of the warrants, just under 9 million Canadian. So, and they're due in May. So if we keep trucking in the direction that we're trucking, I would got a bit of confidence in saying that should happen.
Those are 20 and 80 cent warrants though, right?
Correct.
So they're rolling the money. So it should be. Oh, okay, yeah. Good. What are you looking for in the 100% stuff from the perspective of more specifically the intercept? So when I see the news come through, you've got some assays from the 100% stuff. What do I want to see in the intercepts to get excited? Grade width.
Like 10 to 20 meters at over a gram would be lovely.
Okay, that's not 100 gram meters though.
No, but the 100 gram meters are sometimes hard to come by. But again, maybe that's a good thing, because I do think with Charger, we actually, it would have been better if Charger was a 500 gram meter hit, not a 1500 gram meter hit.
How come?
Because, these things, they create expectations. And I think that's just to do with, it's not rational. It's just to do with how people's minds work and the expectations that get created around things. So I think 1500 gram meters creates a big expectation around projects, when we have consistently produced intercepts that most other companies would be incredibly happy to have. But for us, we got compared back to a 1500 gram meter.
Yeah. What do you think is the mineable width for that kind of situation, that the setting that you have there? And again, you're dealing with Charger and BBM, so that'll be probably different, but...
Yeah, are you talking about within the joint venture and what's going into the... Oh, look, BBM is like that. The BBM is like 20 to 40 meters true width, right?
True width?
True width. And so, that's totally fine at those grades. You could mine all of that. And then we're increasing grade with depth. So, the sort of 10 to 25 meter intervals that we're getting at those underground mining grades are absolutely, enough ounces per vertical meter to warrant underground mining at BBM. And Charger, well, it just carries the grade. So, a couple of 5, even 3 to 5 meters at that very high grade is still going to fly.
Okay. You are going to do some more AC drilling on the JV, as far as I understand. So how come? Why not just keep? I mean, typically what you see in these situations is AC or RC would be for the beginning of the discovery, and then people would move on to diamond.
Yeah, I guess that is a Newmont influence too. We all still believe in the scalability of the project, and we've got a window in between getting the MRE out in the PEA and starting on PFS drilling to actually get out there and do some discovery drilling with our budget. And so why not? Why not try and make another discovery on the project?
But why Aircore though? Why is this type of drilling right for this type of setting, or for whatever you're looking?
Yeah. So look, there are parts of the project that are variable regolith, and you would choose either auger or Aircore to overcome that regolith, and that's where there is thicker laterite. We don't get as many termite samples, things like that. And so with the budget that we've got, and it's a little bit Newmont driven as well, but we've now got the flexibility because the Aircore rig is actually over spec. So we can drill RC with it as well. So we can drill Aircore at a cheaper price, shallower holes at a cheaper price, and if we want to do some deeper RC drilling, that rig has the spec to drill deeper RC holes as well. So we've just gone down that Aircore route for flexibility.
Yeah. Okay, that's on the JV. What about the 100% stuff? What are you drilling there, and why?
It's effectively a similar thing. We found with the first pass holes that we did at Fremen, we drilled RC because there was an RC rig available, and they were extremely broadly spaced drill holes, and so we wanted to come in and fill the gaps geochemically because, again, variable regolith, which I've talked about before. So we've come in and done that, and now because we've got diamond rigs around, while they've got a preference for diamond drilling quite quickly, we like the geology. Right, and so we're coming in with diamond. So we will come in with diamond on those JV targets as well. But the idea is to run a greater, run through more targets before we come back with the diamond drill.
Right. Step outs. Are you going to be doing any step outs relative to? I know you just discovered Charger 2. Are you going to step out from Charger 2? How much, and then more importantly, why? Why is the step out right for this setting?
Right, so we do know that there are structural controls with everything. So look, we have stepped out along BBM, and we have, I know you mentioned Charger, but same thing. So we've stepped out along BBM, and we've seen sniffs of other potential shoots. So we know that we need to sort of, along those step outs, actually come down as well, not just the shallow ones we've done. It's the same thing with Charger 2. We've actually now drilled a series of deeper holes, or we're drilling, I should say. So we've drilled a couple of those. In some of those holes, we've seen breccia again. So we're drilling a series of holes at Charger 2, trying to, delineate that geometry. And then we've got the other 2 DMAG zones as well. So they will come into play, those other DMAG zones as well.
Yeah. Those step outs, how big could they be? Could you step out? Because I remember early days, BBM, you were doing big step outs at the time.
Yeah, so BBM, again, like BBM is that robust nature of BBM. So
you call it a geologist dream early on.
So once we had confidence in that style of mineralization very quickly, just to go, right, we can actually go a long way and aim for that structure and have confidence that we were going to hit that structure, not knowing necessarily how much mineralization is going to be or how wide that structural zone would be when you're stepping out. But we really had Tom talked about it today, layering, geophysics, geochemistry, geological mapping, all those things. We had a fairly good handle on where that structure was going, so we had that confidence. Charger, we've got a handle on where that structure is going, but internally on that structure, we know with Charger things change, because of the nature of the system, things can change quite rapidly. So we have tried some bigger step outs at Charger, and we've got, not burnt, but we've got lesser hole, like the gram meter intercepts are not as high. And that's just because we're sort of hitting edge of that breccia rather than being in.
Yeah, okay. Tying all this back to money though, the 13 million that you have right now, is that going to be enough to do as much work as you would personally want to see, or would you be looking to get some more money and do more work given where the market is, given where the share price is?
I think, like I said, we've got the warrants coming in.
Sure.
That's pretty nice. Well, we should have them coming in. So if we do have an early discovery, then we've got some funding to drive more drilling more quickly. And so that's okay. It all depends on, where we are and what the company wants to do. There are other potential milestones that we may have coming up as well, and we might need to think about funding around those things too. But at the moment, I'm pretty comfortable with where we sit.
Yeah. That's a bit obscure.
Yeah.
I'm not getting much out of there. I mean, there might be stuff happening sometime in the future.
Well, I don't know. Well, there is that. Look, so with Newmont, if we get to 2 million ounces gold at some stage in the next 12 months, and it is 2 million ounces gold, we have to start co-funding, right? So we're going to start funding our 25%. I've got to think about budgets to keep doing that, because I really do. The business case makes sense to keep our 25% now. Absolutely. So I'm thinking about those future things that might come in as part of.
How's that conversation going with Newmont? What are they telling you about the project?
That they want to do this discovery drilling. It's a phase of drilling that they feel is important to them, and so that's what we're doing. We've embarked on that. They've got. Newmont have got like consultancy groups, I guess, internally. So they've got a geophysicist and a geochemist in country at the moment with another one of their geos. They're actually working on rating and ranking some of those discovery targets as well. So, so we're working together with them, and we'll do this discovery drilling and see where that takes us. Yeah. And that's what they want to see as well.
We're getting into some of the more uncomfortable questions and some of the forward-looking stuff here, so this might be a good moment to let you do your thing and go and combat the jet lag. But thank you so much for doing this. It's been a pleasure.
No worries. Cheers. See you during the PDAC at the Course.
Now it's time to go back into Canada, where we're going to hear the story of XXIX, that's the Roman numeral for 29, copper, so on and so forth. That's a company that owns one of the highest grade open pitable copper projects in North America, as well as the largest primary copper resource in Ontario. And it will be Guy Lebel, the company's CEO, telling us more about it.
This is the site. It's 10 kilometers up by 15 long. It's a brownfield. You know, there was a mine there in 76 to 82. They left behind 25 million ton of 1.6% copper, plus nickel, plus PG. They even got, they produced gold, and there was not even gold in the assays. They left the equivalent of probably $200 million at today's value of underground openings that, you know, needs to be pumped out, build a mill, and, you know, a PEA that was done on that site, you know, 15 years ago at a value of, an NPV value of $250 million. Now, if we were to do it today with the expansion of the margin, it'd be better than that. But this is not what gets us crazy. It's the next one, K1. And we tell people, look at this, 53 million ton of 0.38% copper. And they look at us like if we're crazy. And I'm going to explain to you why we like that. So let's have a look at the little video here. This is K1. This is the cutout. Keep going. After that, I'm going to talk. Okay. We did an IP on the, 10 kilometers. Okay, stop that. Let's do some math. If you guys have a pen and pencil, 53 million ton of 0.38. This is the gray zone. Okay, this is what was put out in 2011. Just by, Tom sucks here. If you look at the orange versus the gray, what do you think is the ratio of area? Someone? 5 to 1. I'll take 4. So if they got 53 million ton in the gray zone, this thing is 1.4 kilometer long. You would have 200 million, 250 million ton in what you see here in the cross section. Okay, without drilling a single drill hole, I already quadrupled my tonnage. Don't know the grade yet, but we got the volume. This thing in true width, sorry, not true width, I'll say horizontal width, goes anywhere from 100 meter to 300 meter. We've seen on the video the kind of thing that it does. It's 1.4 kilometer long. Now, let's do some math. Mining cost, $3. US $3 a ton. How about that? Now imagine for 1 second, and look at me here. If you put 45-degree angle on the white side, what is the ratio of the area, what I would call the white side versus the ore? Someone? Less than 1 to 1. No, it's more than that. It's about 3 to 1. So if you mine 1 ton of rock, you mine 3 tons of waste. That's 4 tons at $3. It's $12 US. That's my mining cost. Now, we just did a PEA for a 12,500 tons per day mill in Opimiska, Quebec. Milling cost $10 Canadian, $8 US. Let's say it's the same thing. We're going to build a mill here twice the size, but let's assume it's $8. Mining cost plus milling cost, I'm at $20 US. Let's put $5 of G&A on top, I'm at 25. Okay, now, if that material is 0.4% copper at 450, 20 pounds per ton, 1% is $100, 0.4% is $40 US. I got $15 margin at 450. I got 250 million ton. If you put $6 copper on top of this, the margin doubles. I've got something that's worth, in the billions of dollars. I haven't drilled a single drill hole on it yet. We want to go there and drill this thing down. The grade increase with depth. It doesn't see very well on this hole there, but the average grade of the top hole is 0.22% copper. That's not too good. The next hole down is 0.32. and the one at the bottom is 0.39. We've got another hole beyond the section at 0.53. That's the copper only. Now, this is the interesting thing. We've got PGMs, we've got nickel, silver. All those things are not even calculated in the just quick math that I did to you. This is why we're excited. This has a potential to be another mine in Ontario and the largest copper single source of copper, primary copper in Ontario. So this is a long view of the zone here, 1.4 kilometers. We've done some IP. I mean, everything I talk about is that 1.4 kilometer K1 zone. But there's another 5 kilometers to the east that is, the IP lights up like at Christmas tree, and then there's the zone between K1 and K2 that need to be drilled. So we're going to be drilling over there for a long time, and there'll be a mine in Thierry again. Thank you.
So Guy, I want to kick it off with talking about money, right? How much money do you have right now?
We have $20 million plus $5 million in shares of associated companies.
Okay, what are you going to do with that $5 million?
The $5 million right now, those shares we're keeping. I mean, we're going to deal with them when it's time appropriate to sell. I mean, I'm not going to sell Geiger right now; they're depressed. And Original, I'm waiting for the drill hole anyway, and I'm dreaming that the stock goes to $2, and I got $80 million in the bank.
Yeah, fair enough. What about so you're not going to sell now, that's fair enough. What about the $20 million that you have? What are you going to be spending that on?
The $20 million, you have to understand that it's segregated into Ontario flow-through. There's roughly 3 plus 6, 9 million of Ontario flow-through, 3 expiring this year, 6 expiring next year. Sorry, 5 expiring next year. And then 6 million of Quebec flow-through. And about 6 million, I don't know what the sum ends up, but about 6 million of art cash.
Yeah.
Art cash and flow-through is used to work on expanding resource. It's drilling money. The art cash will be used for paying for the pre-feasibility, all the studies that need to be done ahead of the pre-feasibility and so on.
Yeah. So that includes drilling as well?
It includes drilling. If I have to do a lot of drilling, I might have to not have it. I calculate that pre-feasibility will cost between 7 and 9. I'm hoping to stay in the single digit.
Okay. What kind of step outs are you drilling? How much are you stepping out? And more importantly, why? Why does that fit the deposit that you're after?
Okay, so first of all, at Opimiska, we're drilling the infamous saddle zone. We need to sort out the model. I mean, we have plenty of it, but they don't fit the model, the mineralization model that Geo have. So we're having another crack at it this summer, and we need to drill the hell out of it and understand, if the model doesn't, if the rock doesn't fit the model, we have to change the model. So that's the story. We're also drilling at Cook. It's still going right now. They're gonna drill at Cook until the end of the month. We will look at the result. We already believe that, we will go back for a second run in the fall and get on a tighter pattern. We know that we have the structure. It's highly nuggety, and we need a much tighter drill pattern to get a proper grade and tonnage.
Mm-hmm. What's the average width of what you've been drilling?
Okay, there's 2 zones, okay, and the zones, we call it the north and south zone. They were mining historically underground anywhere between, I would say, 2.5 to 4 meter, what they call shrinkage stoping. And the 2 zones are roughly 5, let's say 5 to, let's go wild, 10 meter apart, mm-hmm. Okay? So, and they were mining 5 grams per ton to the mill from those 2 parallel zones. So I'm looking at, can I have 15 meter of 1 gram material? And then, we don't know really exactly how this goes into the hanging wall or footwall on either side, but can I have a mining width for an open pit and still have, even half a gram rock would be $100 rock. And, that would fit, with the Opimiska rock, I mean, which is roughly at that value.
Yeah, that's all true width?
It's more or less, you could almost see through it because the thing is almost subvertical. It's 75, 80 degrees, so it's almost vertical.
Yeah, okay. What I'm looking for here is it mineable width?
Yeah, it was mineable width on the ground, okay, from the shrinkage stopage, and those stopes are going almost, vertical. When we come in with an open pit, basically, we're going to take slice out of it, and as long as I've got, like I said, 15 meter, I got enough for my shovel to work.
Mm-hmm. And if you do drilling, that's going to be what, diamond drilling? Like, you don't think you can get anything done with RC, or?
No, it's diamond drilling that's going on. Well, we need the core because, there's visible gold and it's very nuggety, so you cannot miss something, grain of gold that would escape to the sorry, I forgot the river circulation.
Yeah, the RC, sure.
And RC is not very popular in Quebec, and, we don't drill hard rock with that.
So if you end up doing step outs, which talk to me about that, are you going to do step outs and more kind of near mine exploration? That would be diamond, but how much would you have to step out?
You're talking about step out on Cook or step out on the Opimiska pit?
Yeah, the Opimiska pit, yeah.
Okay, the Opimiska pit, it's going to be diamond drilling again. We have two zones to the east that call Mechnical and Bouchard. Last time we did a resource at what, $4 more or less. They were not making it into the resource statement. So next time we do a resource ahead of the PFS, let's say in 12-month time, what price are we going to use, and how does the 0.3 material end up being a marginal expansion to the pit, just making it a bit wider.
Yeah.
Okay, so that we want to test this. We're going to have a brain trust day pretty soon with all the geos and people involved, and we're going to look at this.
Yeah. How's everything going with the community at Opimiska? I know you recently had some news about that, which was important, but what's going on? Are people happy? Are they pushing back?
Well, I mean, the town went out to position themselves in front of the Quebec government to get some of the attention that they think they deserve in terms of making Chapet a mining hub as it was before. They want, the rail extension. They want all the agent that are working towards the development of the north to get aligned and make sure that our project gets built and get, everything that, quick permitting and that type of thing. So the town wants the project. We still have to work through the mechanic of, moving the main road, moving, some of the family eventually. Those things we haven't started talking about this. We've got plenty of time to do it, but it is my priority to start consultation on those topics.
Yeah, and in the meantime, you have money to deal with all that, like you pay for G&A, pay for those consultations.
Yeah.
Do you feel like you might have to raise money again, though, in 2026?
I hope not. I think that, we're going to be very careful in the way we spend the money. I believe that I can make it to the PFS with the money that I have.
From Ontario, we'll now travel all the way west to British Columbia, and we're going to hear the story of another one of my personal holdings, Metal Energy. This one is one of the earliest stage companies in the OR Group stable that recently received a sizable investment from Centerra Gold and Teck Resources, each now owning close to 10% of the company. And it's going to be CEO Charlie Greig telling us more about it.
This is an undrilled project. It is drill permitted. We're going to start drilling in June. Two strategic partners already with Teck and nearby Centerra with about 9.9 each. Plus, we're good buddies, as I said, with Steve and Tony. We're in the Toodoggone district in north central BC, so I'll show you that in a minute. Good neighbors up there. There's going to be a lot of news coming from that district from our good neighbors. Hopefully with this one and the Evergold one you're going to hear about a little later, we're going to have even more good news. Really good drill target. I'll run through that. Seasoned exploration team, Alex Walcott, my partner, and I have had this property, in our holster for, about 15 years. So we've slowly worked it up and just brought it into Metal Energy this past year. Of course, I'm getting a little aged, so we also have some fresh legs to help us work on it that have lots of experience in the district. So, where are we? North Central BC, you can see in the lower left there where we are, Niv, up there a fair ways, but still quite accessible, more accessible than when I started working up there 45 years ago, roughly. You can get up there on a road. It's a dusty road. Bring spare tires, bring some extra fuel, but you can get there. And that's our land position, surrounded by some other tenure holders, but not far from that road, not far from power. It is a heli-access property, but that's kind of why it's untested. Okay, so what's the real deal about this one? I mean, it's a fabulous, that's our claim boundary. As I said, we're an inlier. The surrounding tenure holders staked their claims after we staked this. We've had it for a long time. We really didn't get going on it in a big way until the last 5 years or so, but it's a great soil geochem anomaly, copper gold moly, and it's coincident with a really nice geophysical anomalies. So great gold. It's still fairly large. It looks like a postage stamp on the claim map, but it's not. So a 5 kilometer long trend. I know in some of our publications it shows 3.7. I don't know where that came from, but it is 5, and I checked it today. And it's got good gold and excellent copper as well, coincidence. So these are really good numbers for copper and soil geochem values. I started as a soil sampler before everyone in geology. I think I know that side of the biz. And this is what it looks like compared to the neighbors. So the neighbors validated that this is a good copper gold porphyry target. And that was Northwest Copper. They hit a pretty darn nice hole in 2021 with 0.56% copper equivalent over 80 meters. It really got the market excited at that time. They were unfortunate in not being able to follow it up with quite as good a numbers. But this is the kind of way we see it. What they did was they did a very large 100-meter square space soil geochem grid around it. And I know some of the samples were collected down in the valley, so you're kind of comparing apples and oranges a little bit. But it was very clear to us when we did all the soil geochem, or at least to me, that we had the crown jewel of this this district, if you want to call it that, south of the Tutagon. It's not really a district, but it's only 40 kilometers from a copper gold porphyry mine, KMS South, that Centerra holds now. And yeah, it just looked like we got the crown jewel, and I think you can validate that. This is published IP chargeability data from Northwest Copper on the right-hand side, our chargeability data on the left, and you can see it's nicely coincident with the soil geochem we've got. They've got the hits that show this type of system it is. No drilling. They even drilled right off the northwest end, and there's gold all the way down that hole. Not amazing, but they spotted that hole on proximity to our claim boundary, and we don't see any data that supports why they targeted that. This is what it looks like. You're looking from their property in the southeast to the northwest at ours. So our ground is that hill. I've enlarged it in the lower left there. That's that hill. That's a part of the trend that we have with the really good soil geochem and the geophysics coincident. That's what it looks like. It's not as bright a Gaussian, but it's still got the better geochem. Looking at it from the other direction, northwest to the southeast, this is over the hill. You can't see it in that previous view. This is what the rocks look like. They're sort of bleached looking, not amazingly spectacular, but, close up. There's some nice veining down in the creeks. And where the best exposure of it is, you can't really see it super well in here, but these sheeted veins that I'll show you a couple of close-ups of, just to show you that, yeah, there are what we look for in the rocks, tightly spaced sheeted veins. That's that same outcrop. So, where the rock hammer is, that's a closer up view of that same outcrop, and then still closer, a slabbed and stained sample. And in this case, nice centerline vein, The stain part is on the upper side, so there's high, it's a hot vein, potassic alteration. The dark stuff is magnetite. So we're seeing the right kind of things for a copper gold system. And pretty much the last slide here, yes, we have targets on there. We're just spotting, the drill holes right now, but, all the way along that trend, some great looking targets. The map on the left is IP chargeability. The one on the right is the gold geochem and our copper geochem, coincident with the gold. And we're just going to set up some great targets. We got about 8,000 meters planned, 4,000 to 8,000 meters. We got about 10 million bucks in the can, and we're ready to go test this thing. Thank you.
Charlie, let's kick it off by talking about money. How much money do you have right now, and what do you want to spend it on?
We have about 10 million, roughly. I actually don't know the exact number, but it is roughly 10 million, and a large chunk of that is flow through. So we have to spend it in this calendar year. And the way to do that on this project is with drilling. So largely on drilling, and we'll see how much of that we can spend. So let's say it's 8 million or something like that, maybe a little less. I think it is quite a bit. Actually, I think it's 6.8 that we had flow through. Yeah.
Okay.
Yeah.
And can you, now I'm asking a geologist, can you spend money on drilling? You can. Do you want to spend all that money on drilling this year, though?
It's largely, the project's largely tiered up. We might do a little bit more geophysics, a little bit of geologic mapping, some prospecting for sure. So we'll spend a bit of money on those other things, but they're not big ticket items compared to drilling. And, this is teed up to drill. So, largely spend it on drilling. And it's not that hard on a heli access program. You go through money a little faster than you would with a skid rig, for sure.
Yeah. How many meters are you hoping to get out of the treasury?
You can do it with $1,000 a meter. I think that's a conservative estimate. So that would be how we would kind of schedule it. So somewhere between 4 and 8, and hopefully toward the upper end of that, depending on the efficiencies. But I think we can do that.
Is that enough to properly test this target, though? It seems like it's a comprehensive target that you have right now, all the layers lining up and everything that you just showed. So is it? Yeah, is that enough to test that target?
I think for a first pass, if you look at it, there's up to 5 kilometers of strike length along that anomaly. If you project it through the low areas where the geochem's a little lower, partly for the cover. If you put a hole, all the way, how many holes would you need? Let's say you had, 600 meters a hole, on average. That's at least 10 holes, and 5 kilometers, one every 500 meters. No, it's not enough to completely test it, but you would get a good idea, I think, if you just spaced it out that way, which isn't exactly how I drill it, but it's a simple-minded way of looking at it. Yeah.
500 meter step outs, though. That's pretty aggressive.
Oh, that would be huge. But if you wanted to, put a hole, every 500 meters all the way along the trend, that would be roughly what you'd do. Yeah. But no, that's not how we plan it. We would probably concentrate them. You'll aim at the best anomaly first. And if it's looking really good, you probably stay there for a while or, that kind of thing.
What kind of step outs would you do? Like how much would you be stepping out from kind of the first hole?
Well, there's our IP looks down about 400 meters. So on an angle hole, 600 meters will kind of get you down in the ballpark. But if you're in something good, you're going to keep it going. So you could drill some pretty deep holes and you would be burning through footage pretty quickly. I think, again, if you want to look at it in a simple-minded way, and you wanted to drill across the sort of north-northwest trending structure, then you'd probably put a fence of 2 or 3 holes, through your best anomaly. So you could easily be through, a quarter of your drill meterage on one fence, across one part of the system. So, hopefully when you target your best looking anomaly or the combination of soil geochem, geology, and geophysics comes together, you you hopefully will pretty soon say we need to bring in another rig, and raise some more money and get 2 rigs going and keep them going from start to finish. So, yeah.
That's all diamond drilling that you're going to be doing. Why is that the right type of drilling? Why wouldn't you start off with an RC or something else? Why does that make sense?
Well, I mean, RC is sort of for dry, easier and drier areas. BC is not the driest area. I think the core gives you just a way better chance at understanding the geology. I'm a geologist. I like to couch the exploration in a geologic framework. I know in my talk I didn't emphasize that at all, but you
only had 8 minutes, so
yeah, true. Yeah, they really chinched out on the minutes. So. No, I mean I'm a geologist, and that's my shtick. I like to do the geology, and the geology is reasonably well exposed there. So, you have cliffs where you can see the rocks, and there's lots of covered parts too, but there's creeks that you can follow up and see, what the rock exposure is. So you can get a pretty good framework from the surface mapping, but then you want to combine those two things to really leverage your knowledge of what you find in a drill. So, and that helps you, proceed with the exploration.
Oriented core off the bat, or is it too early?
I think so. Let's find something that merits doing the oriented core.
Well, how come? I mean, you're spending quite a lot of money on drilling already, so might as well try and understand the structure as well. So why not oriented?
I guess, we have, as opposed to American Eagle, where we're doing the technical work, there's not much exposure at all at surface. So you don't really have an idea of what the orientations of dikes are, veins, that kind of thing. We got a bit better exposure at NIV. And I would rather spend the initial footage in the first year or so, finding something that's going to keep us drilling. Rather spend that. Okay, this is looking good. Maybe we don't know the orientation of the veins and the dikes and that kind of thing. But unless you've shown that they are really worth coming back after, then why waste the money doing that? Well, that's kind of the way I look at it. Find it first, then take the next steps.
What would that look like? What is something that would tell you, Charlie, keep on drilling, keep on going after this? When I'm looking at the news release or for the news release, what do I want to see in the headline, grade and width?
Oh, well, I mean, it's a porphyry system, so ideally you like, many tens to hundreds of meters of well-mineralized rock. And
what would be kind of the minimum true width, though, that you would want to see there? I mean, you say tens meters, would you be happy at like 20 meters of a 0.7? Is that something they'd be looking for? Is it 200 meters of 0.7 that you need?
Yeah, I'd rather have the latter.
Yeah, of course.
Let's put it that way. But I mean, listening to some of the other talks today, you had Awalé with 500 gram meters. Wouldn't that be kind of nice, right?
1,500.
Yeah. Well, wasn't it? He had 5 that were over 500 or 10 or something.
Yeah, that's right.
Yeah. I mean, that would be amazing. But you're just looking for, I would say, a really nice grade porphyry copper gold, copper equivalent or gold equivalent, whatever you want. But we're looking for something big. When you're up that far north and, you're not quite there in terms of infrastructure, the road's not far away, but, it's still a heli accessible thing. So, you want some really, really nice grade.
When I was there at NAC, we talked about not being a normal porphyry or like your usual porphyry that you're used to. What about NIV? Is that going to be a traditional porphyry? Is there a comp for it? A working comparison that you have?
Well, they're all a little different for sure, but a comp like 40 kilometers away at Kemess South would be nice. I think it has more stockwork style veining. Like the stockwork at NAC is just nowhere really, really well developed like you would in the guts of a classic porphyry. So I would expect I would hope for something a little more like that. And I mean, I showed those sheeted veins at surface, and they, are centerline veins with sulfides down the core, and at least some of them. And so, seeing a bunch of those, but more of a stockwork kind of system. I mean, it does seem pretty gold to copper rich at surface at Niv, you know, for starters, just in terms of looking at the soil geochem. So, you know, maybe it'll be a bit more gold rich, and maybe you don't need the vein density. I'm not sure. You know, we'll only find out when we put a hole or three into it.
Early days, you're right, and it is forward looking. And a Chemes type of hit would be nice. But could it be? I mean, is that a realistic expectation? Is it a close comp, or is it just kind of a proximity comp, just because it's close by?
Oh yeah, I mean, you know, it has the same age. Well, it's a little bit older than Chemes, but. Yeah, I think that's a reasonable, you know, in that belt. There's a whole string of them, Quantica and Flayul, RDP, Chemes, Aurora. You know, they're all in the same belt and the same kind of host rocks, maybe a little bit different ages, you know, and then they're similar geologic and tectonic setting to the Golden Triangle things. So, you know, a variety of things. Yeah.
Fair enough. I want to tie it back to money here, Charlie, and talk about what else you're going to be spending your money on in terms of G&A. Are you going to have enough money to cover G&A and drilling? Do you think you might have to raise again before drilling, or are the books closed?
I think we're fine. Yeah, we got plenty. I don't think we need to raise anything, because I think we are near 10, and so yeah, we have a fair amount of hard dollars. I don't think there's anything really too fancy we have to do before we get up there. Yeah.
Good. Well, I'm going to let you do your thing. I know you have a lot of people to go and talk to, but thank you so much for doing this.
You bet. Thanks, Antonio. It's great to see you again.
It's been mostly copper and gold so far today, so it's time to bring some change into that and travel to Saskatchewan's Athabasca Basin and look for uranium. But not before we've stopped by the Thelon Basin up in Nunavut, where we're going to hear from Rebecca Hunter, the CEO of Geiger Energy.
We have a unique land position, and so this is kind of the overall thing. There's not very many basins in the world that have that really good high-grade uranium, and these are uranium deposits that can be mined very easily because of the grade and the size, and they're very important, and they're in Canada. And so you got the Athabasca Basin, you got a nice established district, and then you got an emerging district. And so these basins aren't everywhere in the world, and that's why this basin is very important, the Thelon Basin. We have the Athabasca, we have another basin in Australia, and then of course we have the Thelon Basin. And so we have a bit of a mix of optionality. We do have projects in the Athabasca Basin, and so a lot of those are open for kind of option. There's a lot more renewed interest as we're getting more and more momentum in the uranium space. And then we're going to be working our Hook project. And so this is a project that Baseload, the precursor company to Geiger, had and was working on. So it already has some pounds in the ground and ready to be, expanded. We're looking at the data more, thinking about, where we have additional pods, can we expand this, as well as looking at the blue sky outside of that. And we also look shallow. And so I guess you want projects that can actually get to the finish line. And so one of the things about the Athabasca Basin is that a lot of the projects now we're going deeper and deeper. And as we go deeper, the development timeline, even if you have a good discovery, might not exist. And so having the shallow potential is very key. And that's why in the projects that we have in the Athabasca Basin, we're focusing on that, the shallow potential deposits that can go into production a lot more easy. And so what's great about the Hook project is that the Akio discovery is mostly under 100 meters. And so you have, decent grades, and you also have that shallow potential, which is very key. And so that's what we'll be looking for more within the Hook project. And we're drilling right now, actually. So we have a 3,000 meter program planned, and we started drilling earlier this week. And so we should have a month and a half of drilling, and then we'll see what we can do there. And then, of course, it's the bigger story here is this: can we find another major deposit in the Thelon Basin and kind of change that trajectory for Canada and for the uranium space for uranium deposits? And so completely untapped country, and so I have a long tenure in this district, so I kind of started my career there. about 20 years ago, and I started with Cameco. And so at that time, Cameco, the big major at that time, was looking all over the world for uranium, and there was a whole different vision. And so the Thelon Basin was outside of the Athabasca and was their key flagship exploration project outside of the Athabasca. And so at that time, Orano was taking their deposit, 133 million pounds, that's right around our property, into production, or they were going towards it. But of course, Fukushima happened, changed the trajectory, and everybody kind of sank back into the Athabasca. But that's not where the future is. I think we have the demand for uranium it's just gonna grow with the power demands as we keep moving forward. And countries are going to need power to advance and do what they need to do. And so what we have is we already have pounds in the ground, just like Hook. So we got 2 zones that were discovered, but not delineated during the Thelon days. And so the Kavik and Tadagak zones need to be expanded, and they could add to the already 133 million pound district that's already there. As well, the big thing that happened last year is we actually had our first instance of unconformity type uranium mineralization at the contact, at the base of the sandstone. And so all that to say that the biggest and best deposits in the Athabasca are found in this kind of setting, and we had the first instance of that this summer. And so now it's no longer a proof of concept. It's now getting in there, getting the capital, getting investors excited, and drilling it to the degree that it needs to be drilled. And so this is just that model. You get those big deposits, you have a sandstone column, and you have the older rocks underneath. And then I won't go into any more geology other than that. But you get these deposits at that contact. And those are the big ones. Those are the ones that are being mined in the Athabasca. And that's exactly the precursor stuff that we found this year. And so no longer are we just looking for basement hosted that typically are a little bit smaller and a little bit lower grade. We're looking for the big ones. And so it's only a matter of time before we can actually hone into the next major deposits up here. And then this is just a little bit more about the kind of rocks that we're seeing. And so, why it's exciting is that we drilled 9 holes into this Loki target, and every one had basically 2 times to 10 times background uranium. So this is huge. This is exactly, for any of the people that work in the Athabasca, this is exactly what they look for above any of their targets. And so again, just showing that continuity that it's here as well. And if it's here as well, we have the ability to find a big one. And the other aspect that's important about up here is that it's all shallow. So we're not drilling to 800 meters, we're not drilling to 1 kilometer, we're drilling to 200 meters. And that just changes the game entirely. These types of systems could then be an open pit, and they can actually get into production in a very reasonable time frame. And so I guess just kind of outlook and catalysts. We have our established districts. We're working in the Athabasca. We're drilling right now. We're going to hopefully expand the mineralization that Baseload discovered, find more zones, just kind of bring that project to advancement. And then the big one this summer, we plan to do, up to 10,000, 12,000 meters, and test for those high-grade unconformity type targets at Loki, as well as several other targets on the property. And just some of our corporate overview, we did the merger last year, so we ended up, we got a fresh management, we have a nice tight cap structure now, so only 52 million shares outstanding. We have about 7 million in the bank, and so we're fully funded to do our work in the Athabasca, and then we'll go beyond after that.
That's perfect, 8 minutes. I think I've scared them, they're all on time now. That's good, Thank you so much, Rebecca. Right, Rebecca, I want to talk to you about everyone's favorite subject, apparently, money. How much of it do you have right now, and how much do you need for this year?
So we currently have 7 million in the treasury. So five flow, basically. So 5 to go into the ground, and then 2 for G&A. And we need another 10. So we're fully funded to do our Athabasca work, but then we're going to we need to raise to do the Thelon project this summer.
Right. And that's something you definitely want to do. It's not like you well, that's kind of your baby, I suppose, right? So.
Yeah, it's my baby, and you want to do it at the scale where you can actually get results. And so the 10 million gets us 10,000 meters, or more. And so, because you want to be able to hit as many targets as possible. So that's kind of the price. And so that's what we want to raise, because there's no point going in there and not getting the results you need.
Yeah. What's your market cap right now?
It's about 15 to 16 million.
Right. Okay. So that is, you would have to get your market cap up before raising that money, essentially.
Yeah, we're hoping with the news we're going to be drilling in the Athabasca, getting some results, get some momentum, doing a lot of marketing too, just to get momentum and people to know the story. So yeah, hopefully we could bring the stock price up before we raise, and then we'll go from there.
Right. Okay, let's talk about what you're going to be spending that money on in the Athabasca and then in the Thelon. What do you want to do in the Athabasca from the perspective of drilling? I suppose it would have to be diamond drilling at this point. I mean, the projects are pretty well advanced. So talk to me about that.
So for the Athabasca, we got 2 drills, so they've started. So we're already engaged in that program, and so kind of a dual strategy there as well. So we have the Akio discovery that James and the team baseload made prior to the formation of Geiger, and so we're going in there with 1 drill, kind of looking at the data, looking at kind of the orientation of stuff, kind of the high grade lenses. So looking to kind of extend, kind of looking to see if there's more pods there, because of course that little prospect also has a sister prospect across the property boundary. So it's already a bit of a little epicenter of uranium deposition. So is there more to the south? Like, can we kind of track that in the near kind of proximal footprint, and then as well tons of upside within the Hope project as a whole. So we're testing along trend, kind of going along the same sort of structures. So the other drill will be focusing on that.
Mm-hmm. How much would you have to be stepping out along that structure? What are reasonable step outs?
The proximal stuff is, within a kilometer. So right within a kilometer of Akio or less. And then the other stuff is 5, the farthest target's about 6 kilometers along trend. And then we kind of step closer again, because that's kind of the best of what that project has.
What drill spacing is needed?
At first, Akio itself has been drilled well, so that, we want to step out. And so we're stepping out at Akio, 100 meters, maybe 500 meters, kind of moving along, 50 meter centers likely. And then again, for the rest of Hook, again, stepping back kind of 50 meter centers, getting along strike, that sort of thing.
Why does that work, those step outs for a uranium discovery like Akio, which is different, dare I say, than what you might be expecting? So, I would know if it works for a porphyry or not, but why does 50 or 100 meters or 500 meters, why does that work?
Well, it does. So it's a combination. We want to build scale of these zones, and so you don't want to step too far either. So it's kind of dependent on results. And so, if we're hitting, the good alteration and there's a bit of elevated uranium, then you probably step a bit closer. Like, it's kind of with uranium, with these systems, you kind of have to be very discerning exactly how much you step out. But you also want to be cognizant of, something that might be too small, and not, you don't want to just drill in too close, because then, what are you actually going to find in the end if it's that tiny?
What are mineable widths for uranium on that side of the basin? What would you be looking for in the drill core?
Well, we're just looking, for grade, some of the widths, like you want, certainly several meters of mineralization, and it all depends. Like, Akio is very complex because it's in these multiple structures, and so you get like multiple lenses. So you're looking, but you do want to have that grade, and also what helps with Akio is that a lot of it's very shallow, and so that also helps. You don't need as high grade, and you don't need as big a widths.
What would that look like? I know if I'm looking at gold, I want 100 gram meters. What do I want to see in the headline for Geiger?
For Geiger, for the Akio, we'll see. You want, percent or 0.5% over a few meters. So, and then the more the better, and the more lenses the better.
Right. Okay. What about just tying this back into the rest of the money, your corporate overhead? I mean, you're going to be running hopefully 2 programs simultaneously. What is your G&A going to look like?
Overall, we're pretty lean. I mean, overall, our G&A, we're burn, just north of like $1 million a year. I still need to kind of bolster up our staff. So currently, I don't even have a VP. So I'm kind of running dual roles, but I do have some very good geos under my staff, and marketing, stuff like that, like trying to get out there, but also trying to be discerning and not blowing the budget on that to a huge degree. To get most of the money in the ground as much as we can.
Right. Okay. When do you think your next important catalyst is going to happen? Your next big news release? When can I expect that?
So in the next, few months and next month, like we're drilling at Akio right now. And so, if any good results are coming, we're going to be posting those. We're also mobilizing Aberdeen. So, we'll have some news regarding to that, just the logistics, getting everything in place, getting our fuel at site, and then drilling in June. So again, midsummer, we'll have the Aberdeen going as well. Mm-hmm.
Is this a bit of a deciding year for you? Like, could it be so that after these drill programs, you write one of it, or one of it gets a backseat, where it's like you say, okay, we'll do everything at Aberdeen in 2027, or you do everything at Akio in 2027?
Yeah, I mean, results dependent. It'll increase as a priority, obviously, for Geiger if Akio shows some really good grades and really good extendability. But I mean, Aberdeen, we're going to drill what we can. We have some really exciting targets at Loki, and I think just the scale of alteration and enrichment in the uranium, something is going on there. So it is a very telling year. Like, we definitely do need to demonstrate to the markets and investors that, this is a place to be. So we really are hoping that we can get some neat intercepts that are just going to, showcase that this is where it is, maybe a new discovery, or at least the startings of a new discovery.
Yeah. Final question. Why'd you call it Loki? Isn't he the bad guy in the story?
Yeah. So Loki is actually one of my dogs. And so a lot of the grids, you have one of the key factors about this project is there's so many targets. Like when I show my gravity map and all the little blue bullseyes, I'm like, these are all targets. These are all valid targets. So I've used Game of Thrones characters. I've used, other sci-fi books that I read. And then, of course, I named my dog's names. So Loki, Bjorn, and Thor are 3 of my dogs.
That makes sense. Do they fight a lot, as much as Loki and Thor would?
No, they're all very good dogs.
Well, I can hear people laughing in the background, and I think the bar is open, so I'll let you do your thing, but thank you so much for doing this, Rebecca.
Thank you very much.
The next trip we're taking is not going to be too far away, because we're going back to Ontario, where we'll be looking for gold again, and specifically the Kirkland Lake Gold District, where Pierre Lassonde has recently made an entry alongside giants like Barrick and Agnico Eagle. The company's called Stardust Metal, a gold and copper explorer, and it will be Janet Meiklejohn, their VP of Corp Dev, telling us more about it.
We have 3 core assets that are located on the Cadillac Break in the Kirkland Lake District. So our neighbors are all mining giants. So as you can see, our first project, which is Kirkland West, is bordered by Barrick on one side, and actually is adjacent to the Agnico's Macassa mine. Then if we move sort of east, we've got Omega, which is surrounded by Pan American Silver, but is also like a stone's throw away from Agnico's Upper Beaver. And then finally, our newest asset, McGarry, sits right on the border with Gold Candle, which was just referred to as Pierre Lassonde's newest venture. It's a private company with a $700 million valuation. That is their main asset is the old Curratison mine. So the company has a $15 million market cap, 1.5. It's got $2.5 million of cash, 35 million shares outstanding, of which 10% is owned by Agnico, 10% Sprott, and 15% Orecap. So that's pretty sweet. As I say, the most important thing here is our location, which is key. They all sit these three core assets sit on the Abitibi Consolidation Corridor, which has a strong precedent for resource growth, monetization, and strategic transactions. So obviously, if we're sitting here, our strategy is to grow that resource and be part of any of that consolidation or strategic positioning going forward. And how are we going to grow that resource? Through discovery. Also, we will evaluate and quantify that the tailings deposit, and then finally our existing 800,000 ounce resource. If we update that to current gold pricing, that can also has a near-term opportunity to increase our resource. So let's talk about the newest asset to the company, which is the McGarry project. So first and foremost, it sits on the same trend as the Kerr-Addison mine. It has an old past producing mine, has infrastructure, and has 150,000 ounce resource. In addition, newer assets that have been identified are an anomaly, a geometric anomaly that was discovered recently, and the tailings deposit, and also Kerr Deep. So this asset, so actually McGarry, I forgot to say, was actually optioned from Orecap in November 2025. So that's sort of when it has come into our bailiwick. Oh my God, I'm so sorry. That's like inexcusable. Sorry. Great inauguration.
That's minus 2 minutes for that alone.
Anyway, let's talk about the district scale opportunity that we've just had. So we did a resistivity study recently, and so we found this large anomaly that looks like it sits around 250 to 1,000 meters deep, and is going to be probably our highest priority drill target for this year. And you know, it's easy to understand that if we find the next big discovery on the Cadillac Break, that's game-changing for us, and not just because of this, you know, the potential size or the potential grade, but more importantly, its proximity. You know, it's sitting next to two potential development properties, and like it's not Mongolia, so it's infinitely more valuable in this space. As I say, we have the largest tailings deposit in the Kirkland Lake District. So they're the tailings from the old Kerr-Addison mine, which produced 11 million ounces at 9 grams a ton. We think recoveries were somewhere between 70 to 90%. So if you can do that math, it's big. But anyway, we're doing math again. Anyway, we're going to do a characterization study this summer, trying to look at what the total tonnage is, what the grade is, what the recoveries are, and hopefully move that towards having an initial resource mineralization. If we're able to move that forward, not only does that increase our resources, but also has the potential to be a near-term cash flow opportunity. So then one of the other exciting exploration properties on the McGarry project is this Kerr Deep, which is below our prior producing mine, was mined extensively historically and has some really, really nice grades, you know, north of 10 grams. And so the idea being but none of that was included in the original mineral resource estimate. So as we update it this year, not only for current gold prices, we'll include that Kerr Deep, all that drill program from Kerr Deep. So that could provide a significant increase in our resource there. So moving on so overall, the McGarry, as a project coming into our portfolio, adds significant near-term, mid-term, and long-term resource expansion optionality. So that's terrific. That's been a great addition. Oh, sorry. So the Omega project, which is the one that's surrounded by Pan America, it is also a past-producing open-pit mine, 600,000 ounce resource currently. I think the best thing that we can do this year is just update that MRE to reflect current gold prices, and then move forward from there to see, you know, how much more drilling, what kind of discovery opportunities exist past then. And then last is our Kirkland Lake project, which actually is contiguous with the Macassa mine that Agnico is operating. It was thought in the past that Macassa system didn't cross the Amakugami fault, but we've had some recent drilling where and results like 31 grams a ton, 22 grams a ton, that makes people think that maybe that system is crossing over the fault and moving onto our property. So we've had Barrick recently moved into the neighborhood, as you can see, to the west of us, and of course we've got Agnico right there with Macassa, so that property has some significant optionality in the near term. So just as a summary, we've got $50 million market cap, $2.5 million in the bank, catalysts including characterization of the tailings deposit and initial mineral resource, updating the mineral resource at Macassa and McGarry. We can put in a drill program. We'll commence a drill program at that anomaly at McGarry that was recently discovered, and then do some delineation drilling at the Kerr Deep. So all of these things are opportunities, both near term, mid-term, and long-term, to increase our resource estimate, or pounds in the ground, or sorry, I'm uranium too, ounces in the ground. And put us in a position so that we can be part of that activity, whether it's monetization or strategic transactions going forward. So, and that's it.
That's 8 minutes. Wonderful.
All right, Janet, I want to talk to you about everyone's favorite topic, which is, of course, money. How much money do you have right now? What are you going to be spending it on?
We have $2.5 million at Stardust. I think, just to back up a bit, we did this sort of rejuvenation rebrand in November, brought in some new assets. So really, we just really hit the ground running a month ago. So in terms of what we're looking at doing going forward, depending on how much drilling we're able to do in the fall, we might need a couple more $1 million, but most of what we have in the treasury right now should be able to advance us through expanding the MREs, or updating the MREs, and probably getting the tailings deposit evaluated. And again, we're in an active area on the Cadillac Break where there's, lots of consolidation, lots of transactions happening. So, we may have an ability to do some kind of non-dilutive transactions that might actually allow us to delay raising any kind of money.
Do you absolutely have to raise money this year? Could you make everything happen? Not just kind of the bare minimum, but could you make everything happen to a level that suits this kind of market, this kind of pricing environment?
No, I think ultimately, we can do some of the low-hanging fruit, which I call like doing the tailings deposit, updating the MREs. But if we actually want to attack that geologic anomaly that we found on the McGarry project, then we'll need some money to do that.
Yeah. Fair enough. Let's talk about what you would be doing with that money, though. What are you going to be drilling, and why?
Well, I think as I mentioned, we found a geologic anomaly. We had done a resistivity survey, and so it looks like there's a district scale magnetic anomaly that's sort of 250 meters to 1,000 meters deep. We plan to do an ANT survey in the summertime, so that'll be a couple $100,000, and that's really to just get a kind of sense of what the geometry looks like and how deep it might be. It doesn't really particularly help with targeting, but I think we'd like to have a little bit of a sense before we do that. And then move into drilling in the fall of that anomaly. I think the second biggest sort of place where we could use some significant money is to further explore the Kerr Deep. So again, it's quite deep at 2,000 meters. So what we're thinking, we have a shaft there, but what we're thinking is we'll put down a host hole and then use some wedge type of technology to sort of efficiently, mostly capital-wise, understand more about the deep Kerr, or Kerr Deep. So that probably, we could use a significant amount of money to sort of, we're still, as a we still need to sort of understand. We haven't actually put together the data from the past drilling, historic drilling. So we need to put that together. We need to figure out what the shaft and the engineering of that shaft can be, and how we can use that effectively in any kind of exploration going forward. So, I think drilling Kerr Deep and drilling the anomaly are probably the two main things that would take more than just a little bit of money.
What kind of spacing are you thinking of drilling on that anomaly? What kind of step outs are we going to see?
Listen, it's pretty early stage, so it would be maiden drilling. We've got a couple of holes sort of in the area that we've done in the past, but at this point we're really looking for discovery. So I think that I don't know at this point what that would look like.
What would a discovery look like, though? When I'm looking for the news, what do I want to see in the headline? Grade by width? What would that have to look like?
So first and foremost, I'm a finance person, not a
Sure.
geologist. So, but I think
I'm not a geoider. You could lie to me. I wouldn't know.
I think at the end of the day, the fact that it sits on the Cadillac break, I think if we brought back anything, so we've got grades, we've got shallow grades at 2 grams a ton, we've got deeper grades at like 10 grams a ton. I think if we brought back something that just showed that there was a brand new discovery on that break, I think that's game changing. Like, I don't even think you have to, let's say it has to be a grade that's similar to what you see, but those are all certainly greater than 2%. I think if you brought that back and just showed that there was potential there, I think that's a whole different scenario for us. And mostly, as we've said in our presentation, etc., there are 2 mills being developed, within 10 kilometers of us. So, finding something that's brand new and having the opportunity to sort of explore that and expand that, there's a place for it to go without too much, which would create a lot of interest.
Mm-hmm. What about permitting up there and First Nation relationships? What does that look like?
Well, we certainly have a history up there, which is tremendous. But again, we're really only a month into this, so we're really kind of going through all of the properties that that are sort of interest and that we're trying to work this year and understand what we have, understand what needs to be done, and we're trying to not rush totally through all that. But we do know who we need to contact. We have consultants that are working with us, and I don't think, it doesn't appear at this point in time that it's particularly for the drilling portion or for any of that groundwork that we need to do, that there are any real impediments.
Yeah. What do you think in terms of timing about having more impactful news out to the market? When could you expect that?
I think again we're still very early on the planning stage, and so there are a number of moving parts. But I think first and foremost, I think the first thing that will get going, hopefully in the next 3 weeks, will be the tailings deposit. That'll probably take 10 weeks for them to do the drilling, another sort of 4 or 5 weeks to do the evaluation. So, maybe if we have something then in terms of a mineral resource estimate in, early fall, September, something like that, that would be super exciting. Omega, putting together the MRE there is probably pretty quick. So, maybe we might see something from there. And that has 600,000 ounces right now. So at 3 times the gold price, whatever that turns out to be, that could increase it by 20-30% in the next, by July. And I think McGarry's MRE is a little more complicated because you've got that Kerr Deep that you're including. So that's probably a little bit more later in the fall. So, and then, in terms of, doing any kind of earnings or transactions or things like that, that's up to fate.
Good. Well, I'll be waiting for that drill plan to see those news out, and then you and I should sit down for a longer conversation and do a bit of a deep dive on what's really going on here. But I know you have to run now, so I'll let you do your thing. But thank you so much for doing this, Janet.
Yeah, thank you so much. Okay, bye-bye.
From Ontario, we're taking a very short trip into Quebec again to look at an advanced stage gold copper developer who's working on what they hope is going to be a new volcanogenic massive sulfide district in the Chibougamau area. So close to XXIX that you heard from earlier. That company is called Original Mining, and it's the CEO, Peter Cashin, who's going to be telling us more about it.
Original Mining is one of the newer companies within the Aura Group. It was created in a transaction through Stephen and Guy by rolling one of XXIX's non-core assets into a known junior by the name of Kintivar, and then creating an opportunity, particularly in Chibougamau. It happens to be a property that I worked in the 1980s, so I have strong familiarity with the property itself. By reviewing some of the existing data, quite a bit of data that was undertaken on the property right up to about 2018, including a resource estimate, we've identified significant VMS potential in an area that was viewed as purely low-grade porphyry copper gold. I think that there's an opportunity for significant base metal discovery to be made near term. We're actually lining up the drills. All of our sites are prepared, and we should be drilling that over the next few weeks. In addition to one of the assets that we acquired from this transaction is ANIC. It is a JV between IAMGOLD and ourselves. It's immediately on strike of the Nelligan gold property that IAMGOLD is currently advancing. It's about 8 million ounces of resource, and we're right on strike. And we have a large portfolio from that transaction, approximately 17 properties in different commodity spaces throughout Quebec. Tightly held, well capitalized, and we're supported by our Aura Group, which is great. This is the lay of the land. Our Roger project is the one that we rolled in. I think that's going to be our flagship. It's got about 535,000 ounces of equivalent gold in indicated and inferred category. Most of the work that's been done was really to look at a porphyry style mineralized system, and that was the orientation right up to 2018. So to the south, you'll see ANIC, and we're basically in joint venture, and we're surrounded by IAMGOLD, and we're sandwiched between 10 million ounces of resource on the property that we have. And that's a bit of a blow up. Approximately $20 million had been spent on the property, 58,000 meters of diamond drilling. I'll illustrate for you the new exploration model. It's we firmly believe, in addition to the porphyry copper gold, there's significant polymetallic, gold-rich polymetallic VMS potential on it. So that's the upside. We think that it has the potential. It's in an area in Chibougamau that has been overlooked for its VMS potential. It has the right geology, the right rocks, and we're pretty excited about it. And there's the resource that's a big constraint. So geologically, I mean, there's the red unit was viewed as a porphyry. I've outlined for you in the hashed line of where the resource sits currently. But if you take a look at the results on the left-hand side, there's some significant polymetallic numbers. I mean, there's great gold, great silver, copper, and zinc. And those were lumped into the porphyry model. We think that's a completely separate. So we've done studies, we've looked at the core, we did some geochem, we did downhole geophysics, and it's the right age of rocks. And the next step is obviously to drill about approximately 5,200 meters on an initial program to test that model. So this is the interface that we're looking at, that we think is actually sitting on top of the porphyry system. So there's the potential of a twofer here, and expanding the porphyry system, but also see a significant massive sulfide opportunity within the project itself. And if we hit, and I'm quite confident we will, it has regional district scale potential here. This is a cross section. So the green is the porphyry, the outline of the porphyry system. The black are the holes that we intend to drill, about 500 meters vertical. And in the yellow circles are off-hole geophysical conductors that we had as a result of our geophysical survey last fall. I've illustrated to above some of the copper, zinc, and gold grades, very significant widths. And to me, I think we're just at the top of the system. And the idea being of going deeper is we want to see that the system is building. Obviously, there's no airborne geophysical conductors at surface, so what we have, it has to be at least 400 meters vertical. They're in 500 meter deep drilling. That's what the core looks like. You can see massive sulfides, highly altered rock. I'll illustrate for you on the right-hand side the kinds of grades that we're looking at: 3.2% copper, 3.6 zinc, 124 grams silver, 27 grams gold, and if, at spot prices, I did the exercise, that's $5,200 a ton or US. So I'd love to get more of this stuff, but I'd be happy with less. So what we've done is, as a result of our work and our discussions actually with Agnico Eagle, is the property that we have currently has strong analogies with Agnico Eagle's LaRonde deposit in the southern Abitibi. It's a 58 million ton massive sulfide, but it's also an 8 million ounce gold resource. And if you take a look at the history of VMS discovery and exploration, VMS deposits are high value and tend to be company makers. Hudbay, Agnico Eagle, Noranda all found deposits of this ilk, and it made them. So there's the Anik. I'll illustrate that for you. So you can see we're immediately to the east of IM Gold's project. IM Gold is currently undertaking an exploration project on the Anik project. I think that they've been actively consolidating assets. I think they're sitting about 12 million ounces right now in that district. Hub and spoke approach is what they intend to have, because there's a number of smaller deposits, but if you have a central mill, it would be economic. So there's significant strategic value to the Anik property. They are undertaking about a 1,600 meter drill program on that right now. So this is the property assets that we acquired as a result of the transaction, in addition to the Roger. You can see Anik. So it's very widely spread, but it's all in established mining camps throughout Quebec. And I think there's optionality in this exploration discovery on those projects. So we have one of the largest 100% owned asset bases. I think that there's multiple near-term exploration catalysts from both the Roger and Anik that could add significant value. I think that as a result of the discovery, there's a strong potential to re-rate the company. We have a very strong board led by Stephen Stewart, people that have found mines, built mines, developed mines. I'm really happy to be part of the OR group. Since we announced the transaction and with Kindevar, we've upped the market cap by about 5 times. We're well capitalized. We've got almost $8 million in the till, 3 of which are hard dollars, very important. And we have about a $22.5 million market cap. Lots of shares, though. I'll have to work through that, but we're priced at about 8.5 cents currently on the venture as AUME. So again, a very proud member of the OR group. Lots of support from what I'm trying to do here, and I think that there's an opportunity for success. So why invest? We've restructured.
Go on, Charlie. Start clapping. He's over time. Start clapping.
Am I over time?
Yeah.
No, it's 8 minutes goes by quickly. So optionality, actually, you're in an extra, really important entry point for the re-rate with the discovery of VMS on the property or results from the Anik. So I leave that for the end. Thank you very much.
Thank you. Yeah.
Peter, I'm going to kick it off by talking about money. How much money does Original have right now? What are you spending it on?
$7.8 million, about $3 million of which is hard dollars, which is for our G&A. So we've got approximately $5 million with which to expend on, and that's full through for the most part. That's all full through front. So it's got to be expended in exploration.
How much do you want to spend on G&A this year?
Oh, it's very minimal. I mean, my G&A burn is $500,000 maybe per year, $600,000. Because look, the company's new. I haven't engaged many people. I don't have a VPX. I've got the OR group that's able to provide me with all of my back end support, which is, not notional but nominal. So.
Do you want to hire a VP or hire other people?
I do, because right now I'm doing everything. I'm literally doing the exploration planning. I'm letting all the contracts. I'm setting up the personnel to undertake the work. I'm looking for different service provisions and stuff like that for the project. So I could sure do with the help.
Okay. What would that do to your G&A? I mean, because 500,000 is low. I mean, even if you double it, I don't think anybody would be insulted.
No.
You're not going to double it, though?
My intention is not to. I mean, if you take a look at my history of all my previous companies, I tried to keep the G&A overhead at the low end, of juniors. And my preference has always been to, focus most of any expenditures into the ground.
Yeah. What are you going to do when the 5 million that you can spend on exploration, give or take, what does that buy you? What do you want to do with that?
Wow. Probably about 10 or 15,000 meters diameter.
Is that enough to prove up the thesis that you have right now?
At this point in time, the difference between a gold opportunity and a porphyry opportunity, which requires fairly intensive, tight space drilling. A VMS, once you're into it, you know what you're dealing with right off the top. They tend to be much more consistent, persistent. I mean, you can do different techniques with which to determine, relative continuity. You can drill in this thing, you know what you're dealing with. You can do the mineralogy and get a relative determination of your grades. So I think at this stage I'm more focused on confirming the model that we have currently at Roger. I'm particularly more excited in the instance that we do make a discovery that it's completely open ground, like the opportunity to expand and make this more of a regional play than a single one-off. To me, is what excites me.
Mm-hmm. What would you have to see in the drill core to be able to confirm that? Like, what are we talking about? Grade width? What's typical for these kind of systems?
Look, they're highly variable. I think more than anything else, what's more particularly important is that we know that we're dealing with something in the 1.5 to 6 meter width right now.
Is that mineable? 1.5?
For a VMS, no. No. Typically, 10 to 20 meters, maybe more. That's reasonable mining width. I think I outlined in my talk earlier today, is given current metal values, and that's for those polymetallic grades that I was able to illustrate are fairly high value. So I don't need a lot of material at those kinds of grades. And the fact that if indeed Opemisko goes forward with their intentions and they go into production, they build a concentrator, I can actually use that capacity to process my material, because there's parallels and the processing flow sheet that Guy would use and the mineralogy that we currently have at the project, or what I anticipate to get on the project.
Right. Are you going to be drilling oriented core or too early? Or
at this point in time, no. I think more pertinent is ensuring that we have reasonable accuracy of where the drill stream is going. The footwall, or the structural footwall, or the hang wall is a very magnetic rock, and the methods that they were using are compasses, which are affected by the magnetism. And I think that there's some inaccuracies of where the previous operators actually put the holes, and that's a bit of a problem for me. The better way to go is gyroscopic surveys, which you put down on a hole.
Okay, what does that mean in terms of step outs? Does that influence the way you're gonna space the drill holes, though?
No, in this first step, it's quite easy. I mean, using the downhole geophysics, the radius of detection from the drill axis is about 150 meters. So the sections are 250 meters down about 500 meters. And by doing downhole geophysics, I'm not going to miss anything big. Ultimately, I don't want a small little target, a technical success. I want something in the 5 to 10 million ton range, which I think is feasible. And at these high grades of gold associated with the copper and zinc, I think it'll be a very high value opportunity.
what would the average grade have to be? Because 5 to 10 million, okay for a VMS, not big in the grand scheme of things, so I suppose you would want it to be higher grade. What kind of grade would you be looking for?
I don't know if about grade. I would base it on the dollar per ton value of the material that we intersect. And my base model is 5 to 10 million tons of material. It's about $250 per ton. But at current metal prices, I think it's much higher value than that.
Okay, but you need at least $250 a ton to make it happen.
Correct, yeah.
Okay, when could we expect some news or some significant news out of this?
The most significant news is obviously getting the drill program on the go and doing undertaking the drilling that we intend to undertake. I mean, ultimately, anybody hopes that they'll get, a home run hit right off the top. But I think, I'm trying to be conservative and say, okay, well, if we don't do it, what will lead me to believe that we're onto something? And I think the downhole geophysics will tell us if we're seeing strong conductivity off the holes that we're currently drilling. I think that to me is indication that we're in the right direction.
Mm-hmm. Any indication of time though? When do you think you're going to have that drill plan out? Is there related to seasonality? It is, I suppose. So when do you want to have that drill plan out by?
Well, it's happening now. I mean, we've done all the site preparations, the site cuts, the drill pad and the trails. That's all done. And we anticipate that we want to get, we're hoping that we get the drill going by the 5th of March. That might be a little bit delayed because most drill contractors right now are so full of work that its availability is a bit of a problem. I might have to change my drill contractor. But my hope, and right now, because of the lack of men, they're working on a 14-day on, 7-day off schedule. It's not continuous drilling. I'm looking for a contractor to provide us with that continuous drilling, and I can drill pretty well year round on that property. It's on a sand plain. It's not swampy. It's lots of trails, easy to get around. There's going to probably be a bit of a break on the spring thaw and the fall freeze up, but I think I could pretty well drill 10, maybe 10 and a half months of the year.
So you and I should sit down for a proper barbecue somewhat later in March?
Yeah, that would work, yeah.
Good, awesome. Well, Peter, thank you so much for doing this.
Yeah, pleasure.
Now, moving on and going back to British Columbia once again. So staying within Canada, we're going to be hearing an ore group adjacent story that recently had a management reset and is now gearing up for its first drill program ever in the Toodoggone district, close to other significant discoveries such as Thesis Gold, TDG, and AMark. That company is called Evergold, and it's the new CEO, Alex Walcott, who's going to be telling us more about it.
Everyone's been hearing about the Toodoggone in northern BC, basically with the Aurora discovery. You see Lawyers and Thesis, XXIX Mine. We're right in that district. As you can see, TDG is also. Our neighbors are Thesis Gold and TDG. They tie onto our property. But you can see us right up in the purple, right in the very northern part. And we're a small property, but we've been worked not very much in the last little while. Typically, 2021 was the last time we were up there, typically due to financial reasons, and basically just never made it back. But we did have a nice intercept, and since then we've had some restructuring of the company, new management, ore group involvement, and moving on from there. So as you can see, we're a very tight, small cap company. We're about 8 million, comparable to the giants in the area, like Centerra, Thesis Gold, TDG, AMark, and then coming down the list to Finley Minerals, which is probably the closest to us. Here's just a quick view of the whole area. I mean, it's actually a relatively nice country to work. I mean, you can see the black dots on the map. They're kind of hard to see, but they're kind of the mineral occurrences in British Columbia. So you can kind of follow them up here. Where you can see in the south, you see the Aurora and TDG Shasta, Aurora West. And then you come up to the north, a little further north, you'll see Lawyers next to that road there. And basically then the Thesis Gold Ranch project, which is only about 9 kilometers from our property itself. So, and it's actually a very broad valley we can get up to. So just a quick 3D view of our property. We have basically a couple types of mineralization on it. We have an epithermal gold system and a lot of copper smoke, so potential for porphyry copper. And with the advent of basically what's the discovery of Aurora, we've re-looked at all this data and trying to rebuild all the story and trying to understand it a bit better. But just in the lower right corner, you'll see this trend in the geophysics. And it was actually not designed to map the fault as per se, but you can see this nice structure mapping. And that's our controlling structure for the GL1 zone, which is what we're going to look at now. And that's our gold system. So here's a property just as a whole. You can see in the south is the Golden Lion, and basically then you can see the other occurrences, the Copper King and the Claw. These are just min-file occurrences, and there's another one called the Yellow Dog up there, which has some nice areas. We had previously drilled numerous times. There was historical drilling done in 1984, and then we were there in 2020, 2021, and we put some nice holes in. We have shallow mineralization driving down to depth and open along strike. Just a quick map of the geos here. And I'm not a great geo because I have the same prefix, different suffix, but geophysicist. But we can see here, this is the area that's primarily being explored is along the yellow here. And that's where historical geochem shows a nice geochem anomaly tracking down. And it's basically, this is a contact between the Takla formation, the Tutigon formation and the Takla rocks to the north there. And basically it's a reverse fault coming up. So we're just gonna focus in on the area right where we see those red lines here, and that's where the drilling is. This area here, that yellow line's about 1.8 kilometers. The whole strike probably along this trend is probably closer to 4 or 5. So it's quite interesting. We have a lot of places to grow, and we're just going to show you some of the sections here. So it's quite a bit of favorable mineralization here. Here's just a quick view looking south-southwest of the last section of drillings. And it's always the last holes, as we all know, that drill before you leave. You get the assays back and go, oh great, would have been nice to have a longer season, but we didn't. So here's the basically north-south section here. 2021, that last section, is kind of just the last time we actually really had nice coherency in the mineralization. And that really kind of pulled it together and saying, okay, we can do something here if we get back, chance to get back in. What's interesting is it doesn't really show here is this mineralization sits forward into the structure. And basically it's all basically a destruction zone within it, which actually is where the mineralization sits. A lot of that mineralization on the left side there was drilled the wrong direction and down dip and parallel to dip. So we actually might have missed some of the things, and that's kind of really quite important here. So basically looking back at this data, I should probably go back and see it, but you can see the actual magenta is greater than 1 gram material. And these are composites, obviously, so, so everyone averages. But, we've had like 66 meter to 1.36 grams, but we're also getting silver, which we never really talked about, because silver since 2021 to now has changed significantly. We get 11 grams silver. Then you come down, we get 40 meters of 0.98 copper, and then 40 meters of 1.99 copper with 23 grams per ton silver, which actually starts to add credits. Then we also have these other credits. This is a very rudimentary model just to try a wireframe to see what's happening, going on, just for planning. So just to show you some of the actual high-grade intercepts, this is a 2 gram mark. So anything greater than 2 grams is where we kind of see these high-grade intervals. And that's why you can see if you drilled something the wrong direction in this case, you could actually miss quite easily. And basically you'd be having a really hard time to try to figure out what actually works. But you can see here these high-grade minerals, just where the magenta lines cap off, that's greater than 5 gram material. On the left side in the blue, that's greater than 25 grams of silver. And just a quick zoom in on 2021-25, you can see this 32 grams and 13 grams and 9 grams. And lots of low-grade supports around. This is just a section I threw in to show the silver, because the silver doesn't necessarily correspond with the gold mineralization. And as you can see, some very high-grade intercepts. I think the highest grade is up to 904 grams. So that's, given to show you a scale, that's 200 grams per ton. So there's a lot of silver credits also, and basically it bumped up the scale where you see greater than 10 gram materials. So a lot of places to go look, and if we can actually basically systematically drill this off, and actually we might actually have quite a bit of success here. So just quick geological section here. Most of it sits in the intrusion within the Tutigon formation, and basically a lot of the mineralization sits next to the fractures, the fracture zones. But once you step outside that, the silver actually kicks up. So it's not just limited to next to that contact, but further out too. And it's a reverse fault with the basically older rocks being pushed over the younger rocks here. And it's kind of held up in the second order faults here. Incidentally, just a quick note, Taylor Quinn's our master's student, and he's been finishing off, and he did a great job putting a lot of this geology together, and he will be our exploration manager. So it's going to be and he's worked on it for the last 4 or 5 years, so it's great. So we have a lot of A lot of resources there. And we also have copper, and that's one of the nice things we looked at. So when we first were up there, we never really looked at the copper potential, but we've gone back, digitized all the historical data. We had some sniffs out behind Golden Lion in the GL2 zone. There was some skarn style mineralization, some porphyry dikes, but some very nice grade mineralization in the copper. But we also have a lot of copper surrounding all over the property. Just a quick overview of where we have greater 1% rock samples. So scattered throughout the property. I mean, obviously when you're high grading rock samples, everyone always high grades it, but when you have enough of them, you're no longer high grading. You're seeing something form. And this is actually just a section of an old report, which is from the 1970s, which UMEX drilled. And basically they talk about, it's not a porphyry necessarily, but they talk about 150 feet where you have native copper, chalcocite, pyrite, chalcopyrite. So there's a lot of definitely copper up there. So that's one of the things we really want to go take a look at. And we haven't worked that this year. Also, to support that, geochem silt samples. This is over a broad area. You can see the scale bar in the south there, right in the bottom there. That's 1.4 kilometers. But if you look at silt samples, when you're starting getting silt samples up to 900 ppm copper, that's a system somewhere. So all through here, there's copper. And it's massive. This is kind of mag over top, regional mag. Unfortunately, we don't have any geophysics up here. So this is all old historical data. So it's actually a lot of target area. So it's kind of a bit of a two-stage process here.
Maybe it's not that unfortunate that you don't have geophysics, otherwise this will be a half-an-hour presentation.
Exactly.
You're up on time, Alex.
Okay.
Thank you so much.
All right.
Alex, I'm going to kick it off by talking about your favorite topic, everyone's favorite topic, money.
Oh, money.
Money is not actually looking through the group of the org group and how much money everybody has. Ever is kind of falling behind. Can I say that?
It wasn't a poor distant cousin right now. Partially because we haven't actually gone and raised money yet. What we've been doing is just working on and telling the story right now. Evergold's had quite a few changes over the last little while. I mean, we had a rollback in basically the fall. And then we had quite a significant management change. We brought some new directors on. Well, a new director individually, we bought one new one last year. And we're just trying to restructure the company and kind of focus our efforts. I mean, Charlie, Greg, and myself have both kind of stepped up to the more management side of things. And we're geos, so whether that's a good thing or a bad thing running a company, it's kind of always a sport. And mostly pretty well our entire board is geos.
Are we finding it so far, though? I mean, this sitting in the hot seat?
So far so good. I mean, I know the geology, I understand the rocks, I understand the area, so it's actually relatively easy to tell a story that I believe in. So it's not, I'm not peddling anything, I'm just saying what I believe and what I think it is. And so it's quite easy to talk about because it's like, it's a good project, it's interesting. I mean, is it a slam dunk? Nothing ever is.
Yeah. It's only annoying when someone cuts you off at 8 minutes on your presentation, right?
Yeah, it's fine though, because I only have 5 left. So it's actually, I almost had it. Next time
That's
next time I'll rehearse and actually get the timing right.
There you go.
I like to wing things.
Money is important though. So talk to me more about that. I mean, your other cousin Merge done a pretty good financing. Is that something that you would be chasing? Would you just take retail money? How do you think about that?
We're talking to quite a few different groups, and basically, hopefully, we can get something like Merge, but you never know. It's a very different target. Merge is a bit of a unicorn. It's an untested drill target. So versus Evergold has been up there before. We have drill targets. So one is basically a wide open blue sky dream. One is basically a drill tested prototype. So we're probably going to be doing a bit of both. So fingers crossed. We get in, it's very going to be challenging.
If and when you raise money, how much would you want to raise well, I mean, that's always kind of an open-ended question, but as a geologist, how much money would you want to spend on a first pass program here?
Because we kind of have targets in place, I would think I would be looking for about $4 million to get up there for a program. Okay. And I think that'd give us a decent test of the GL1 main zone, actually do some drill testing and work out our theories. And basically, along with a reconnaissance test for the northern part of the property, we have a lot of copper numbers going on. And we really want to try to do that in conjunction with the drilling. And I think we could actually build 2 stories.
$4 million, fair enough. And then there's probably the opportunity for flow through among that as well, and so on. So
yeah, for it's BC property, so that's the beautiful part is we get flow through, and we still are kind of evaluating the critical metals because we do have all the copper assets, and that may be sometimes you go looking for one thing, and basically your copper may be stronger than the other one. So
yeah, and it's got to be DD? Like it's going to be diamond drilling, right? There's no option for RC or anything else that you can do.
No, I think it's basically we have a plan in place. I mean, we're just going to fan holes, kind of replicate what we did previously. The idea is stay in the mineralization. We kind of have a zone. We have a concept now. We're just going to test it and systematically work it through. We also would like to do some geophysics in the northern portion of the property, which has never really been looked at. It's been picked away at for years historically. There's been a lot of sampling and mapping up there. A couple of drillings holes done in 1974 by UMEX, one of the French companies, but nothing since really. So it's just been kind of sat dormant. So we really want to get up there, do some more sampling, some mapping, maybe some induced polarization, because it's something we can get a permit for this year, but we wouldn't be able to drill up there this year. The permitting is too difficult.
Oh, so because the season starts in what, July-ish is when you would have.
We're hoping to get in there in mid-June, depending on the weather. We're southern exposure, so the snow should melt, so that may help us. I mean, you do have some mitigation with environmental stuff like caribou, but we do have a wildlife management plan in place, so we think we can mitigate that. So we could start a little earlier because time is of the essence up there. You don't want to go show up late and find something and then get kicked out.
Yeah.
So if you can get in there, even 2 weeks makes all the difference in the world.
What's the First Nation situation? What do you have to get them to sign so you can work?
We basically do have to talk to them a little bit more. We have been reaching out to First Nations. We do have a permit still in place from when we have it. So we had an area-based permit. So we still have that in place. We still have a camp permit in place. But we are actually basically being good neighbors. We really want to talk to engage the First Nations. So we have reached out and talked to a number of them. So we're working through that also.
Right. Okay. And that's how's that looking though? I mean, is it looking like you're still going to be able to do some work this year?
Yeah, absolutely. I don't think that's going to hold anything up.
Yeah.
That's just more just checking the boxes and basically doing things for like a good corporate citizen, really.
Okay. Yeah. What kind of spacing are you thinking makes sense for this kind of target in the first pass?
Gold systems are tricky. I mean, you aren't going like the 200-meter step outs like a porphyry or 400-meter step outs. I mean, they can be very small systems and very rich. I would say I would like to do probably 4 pads, maybe 100 meters apart, and basically just fan up those pads to try and understand it. Probably maybe even 50. Just do fans and just try to understand the orientation of the mineralization so we can build it out from there.
Okay.
I mean, once you hit, stay on the mineralization. We do have gold sniffs in the historical drilling, but I think a lot of it was drilled the wrong way because we have a different body and drill parallel to it. You can't miss, especially when you have like wispy high grades and kind of coming in and out.
Are you going to do oriented core?
Nah, I don't think so. It's a bit of waste.
Yeah.
Yes.
Too early?
Yeah, too early. We don't really need to do it. I don't think it.
Okay.
It's just a lot of expense we just don't need right now.
Right. What would success look like? What would you be looking for in terms of, or when I see a news release come by, what do I want to see in the headline, grade by width?
That'd be a tough one to say, but I'd like to replicate what we saw in that 2021 section. And basically, if we could replicate that from section to section. So, I mean, we had some nice high grade sets. I mean, up to, I think it was like one gram over 60 meters. But if we could replicate something like that and step it along and get some consistent coherency and actually build on that, you never know, that structure could be very promising. But, you know, it's mineral exploration, so you always got to take it with a grain of salt, and Mother Nature can throw you curveballs all the time, right?
News around or before Christmas?
Oh, before Christmas, yeah, I'd say that. Okay. That's safe to say. You know, sometimes, you know, next Christmas, no. No, we definitely like to be, I would like to see news come out as soon as we get the assays in. I mean, I know there's always this, people like to feed news out, but I think if you get the data, you should put it out. That's kind of, I'm pretty old school. And I think if you have data and then get it out to people because they have the right to know because they're paying for it effectively.
Yeah, yeah. And I gave you quite a lot of room there, though. I gave you quite a lot of room until Christmas.
Well, yeah. No, I think basically it's going to be a busy year. So that's one thing that's going to happen. And labs are going to make promises, contractors are going to make promises. But the reality is you're probably going to be looking at least October.
Okay.
That'd be my guess.
That's good. That is a good indication. What about G&A and everything else in terms of spending money on? Because that's something you're going to have to raise again. How much? What does it cost you to run this company?
We're going to try to keep it cheap as we can. Like, we don't have an office, so we're kind of we're doing. Charlie and I are kind of running on some of the other stuff, and they're just out of our own offices. So we kind of like just passing along. So I think we'll be okay with G&A. I don't think we're going to run out of money. We're going to try to keep that to a bare bones minimum. We have a couple people helping us out with marketing right now, so we're going to try to keep that going. Just to kind of just keep them working. And I mean, Charlie and I aren't working full time on this. I mean, as much as we are at Forefront, we are actually doing consulting also on it. Basis. That way we aren't having massive overburdens of these huge salaries, right?
Yeah. You're not an org group company like the rest is, like merge now and everything. So yeah. A distant cousin, as you call it, a poor distant cousin, I think is what you call it.
Poor distant cousin.
What does that even mean? I mean, is plans to change it? Will you be going, like, what does that even look like?
Well, it's very, I mean, it's too early to say right now. I mean, if they want some more investment into it, basically we might come out of the umbrella. But it's really too early to tell right now. We aren't really sure of the exact direction of that. So
yeah.
We're working through things and go from there. Steven and those guys have been very supportive. So, we definitely appreciate their support. So we're definitely want to continue to work with them.
Fair enough. Well, the bar is open, so I'm going to let you do your thing. But thank you so much for doing this.
All right. Thank you. Geo, you know how to make a Geo happen.
Last but not least, it's time to hear a bit of a different story, one that ties a lot of these companies together. This next company is not an exploration nor a development company. It's actually a bit of a hybrid. It's a merchant bank and an investment issuer that's looking to form companies, acquire assets, and create go public transactions with the occasional activist investing, of which, by the way, Awalé Resources is a good example. That company is called Orecap Invest, and it's Stephen Stewart, the CEO, who's going to be telling us more about it.
So Orecap is sort of the mothership, is one way you can think about it. It owns positions in most of the companies you've heard today, not all of them necessarily. And as Antonio said, it's not an exploration company. It's actually an investment issuer, according to exchange rules, that allows us to buy and sell shares of other companies. It also allows us a little bit of flexibility to create new opportunities, which we've done time and time again. I think that's, if there's one thing you can take away about the OR Group, is that we're entrepreneurial and we look for new opportunities. I don't want to say we're deal junkies, but we're opportunity junkies, and we see lots of opportunity because this market is so inefficient. There's so much opportunity if you can separate the wheat from the chaff. So just quickly, and I'll just sort of run through, why I think each of these companies are compelling. You've heard from all of them today, but what I'll point out there is that we've got $40 million in equity in our, call it treasury, if you will, and where market cap's probably $25 million. That's massive discount. So there's a huge disconnect there, and I think each of them are growing. What's relevant, and I saw, where's Stefan? Stefan's here somewhere. There he is. We're a proud new shareholder of we will be this week, we anticipate, of Kirkland Lake Discoveries. We're getting about, as you can see, $10 million worth of equity thrown on top of our additional equity. He's got a great company there, huge land package in Kirkland Lake, which is where I really sunk my teeth into this industry. Along with shareholders. Eric Sprott's a shareholder of his, so is Rob McHugh and a couple of famous faces. So we're very proud to be a shareholder in him. You haven't heard much about them, but I encourage you to go to their YouTube channel. He does a good job of marketing and explaining to investors. Aside from that, I'll go Tony Moreau, American Eagle. Why we think that is a great investment. That was sort of a foundational investment for us. We own, as you can see, just over 10 million shares there. Clearly that is growing. Okay, that we believe, I don't have a forward-looking statement, but we believe that's a mine. We think it's probably the best copper gold porphyry in British Columbia. That's a bold statement, undeveloped, of course, but in terms of what it offers, in terms of topography, it's flat-ish, certainly flat for British Columbia. You can drive to it. It's clearly getting bigger. It's already big, and that south zone is where you're going to get your capital paid back. So we think that has the opportunity to really grow. So we're long-term holders of that. XXIX, Guy, the math professor, where's Guy? Guy did a great presentation today. I think XXIX, a massive disconnect between price and value. Of course, I'm biased, but it doesn't mean that it's not true. He's got two mines in XXIX. He didn't really talk a lot about Opemiska because he has a hard time figuring out what child to talk about. But Opemiska is a mine. It's very clear it was a mine. It's going to be a mine again. It's the highest grade open pit copper deposit in Canada. Published a really nice PEA, and we believe that's going to get bigger. And Cherry, I won't belabor Cherry other than, it's much bigger than the current resource or the historic resource will indicate. We're very optimistic on that, so that we're going to have a robust drill program because Guy's got a nice little treasury now. What's next? Awalé. Mr. Chubb just had the pleasure of being on site not too long ago. They run an extremely professional shop over there as they drill very, very compelling gold in a very interesting place. Great group of people. That's, again, one of our core investments there. We got $11 million. It's done phenomenal over the last 2 weeks. Keep your eye on Awalé. He's got a resource estimate coming out and a PEA followed, and just growth. There's a lot of meters drilled there. There's a lot of eyes on it. Newmont's a big shareholder there, and so is Fortuna. There's lots of corporate optionality in addition to what he's going to grow on the existing assets, but plus the Freeman, call it the 100% ground. It's a huge land package, and it does not stop at the JV boundary. Metal Energy, that was an interesting investment. We don't have a huge position on that, but it's been a wonderful turnaround for us to bring Niv, Charlie and Alex's asset into there. Long-term holders. Stardust, I think you should really put Stardust on your radar. Why do I like Stardust? It's cheap. We repositioned it, rolled it back. We're working on a few things that really could bring a lot of attention to it, including, we just brought on Janet. We just hired a new VPX who's going to be out there in the trenches. We're really going to focus on it. It's why I like it. I mean, I think it's $13 million market cap. It has this geophysical target that's sitting on the Cadillac Larder Lake break. Okay, it's never been drilled. We just found it in November. It's huge. If it's real, we become the center of gravity in Kirkland Lake. That's kind of how I see that potential. And that's this business is crazy. That's things can change really quickly. Now it's a geophysical target. I'm sure you heard about a lot of them today. They're binary in a sense. They may or they may not be. And if that geophysical target is, we're in business. If it isn't, well, I guarantee you that company is already underwritten by the ounces in the ground that it already has in the Omega and the tailings. I think those tailings are going to be reprocessed either at Upper Beaver or our mill or what's happening at Gold Candle with Pierre Lassonde there. So, I mean, it's world-class gold camp. We have a world-class sized geophysical target. It's very interesting. So keep your eye on Stardust. We're very busy. And I have to say, it's been overlooked for the past 2 years because we've sort of been rudderless. We've been distracted, but now with Janet in there moving things forward, expect us to be very busy. And then, of course, Original, another new opportunity. Very pleased to bring in Peter, who's got a tremendous track record. And one of his companies before us, I think he took, three pennies to, $10, something like that, Peter? $9, okay. Well, we could have rounded up, but Peter's got a track record of creating value. There you go. Integrity, that's what I said off the top, so it's good. That's an interesting drill program. Peter just got back from site. He's going back up there. The drills are going to start in a week or two, and fingers crossed. So look, there's huge optionality baked into this company and the companies that we have right now, and I think they're all growing. I think they're going to correlate very nicely with what we think is happening on the venture. And then we have other assets. We're the underlying owner of that McGarry project, which we talked about with Stardust. So Orecap actually owns it and will always own at least 25% of it while Stardust spends its exploration risk capital to develop it. So there's huge optionality value there. We also own another project out by Juby in the Shining Tree area. And then we have new opportunity. I talked about new opportunities as I finish up here, and I'm looking forward to hearing from Tom. Expect us to create new opportunities within Orecap. Okay, so that's sort of Orecap's raison d'etre to hold large equity positions in not just these existing companies, but new opportunities where we will become seed shareholders. Invest at the ground level. And then we will seed them with not just capital, but assets and people. That's what we do. And then we'll support them through the OR group. So why would you own Orecap as opposed to any one of the other companies you heard today? It's, if the stories are too intense for you, you're not a geophysicist, you want to invest in a group that clearly has a demonstrated track record of financing good projects and working with good people and acting with integrity. Then take a look at Orecap. You may not get the torque that you'll get on an American Eagle or an Awalé or an XXIX, but you'll get diversified exposure to a hardworking group who is well aligned with everybody here.
Stephen, actually looking at these questions, most of them are not really applicable to you. The money question is though, so how much money do you have right now, and what are you spending it on as an investment issuer? What do you really do with your money?
Well, actually, Orecap doesn't have a lot of cash in the bank as the moment stands. We've got, I believe it's $40 million in marketable securities in each of our portfolio companies. I think that's effective after we close the transaction with Kirkland Lake Discoveries, which is going to happen this week, I'm quite certain. Relative to our market cap, which is about 27%, so obviously that's at a massive discount. Cash, I think we have less than $1 million. And why? Because we don't really spend a lot of money. Orecap doesn't have drill programs. And the bottom line is, look, we could trim our positions down if we want. And, that's always on the table. But I'd rather hold equitable securities. I'd rather hold shares in each of our portfolio companies in cash because I have a long-term view on them. When the time comes when we do need cash, you need cash for Gina. You need cash to survive as a publicly traded company. But more importantly, you need cash to transact on opportunities. And there's going to be a lot of opportunities. We see a lot of deal flow. We're evaluating a lot of opportunities within Orecap. That'll be a time when you expect us to pare down some of our wins. I've always said to each of our portfolio companies that our objective is always, first and foremost, get our invested capital back. So everybody understands that. And then we want to let the balance ride a little bit, right? We're not in the business of collecting share certificates either. It's, we have a fiduciary responsibility to Orecap to manage the portfolio effectively, and that means exiting. I mean, that's the most important part of investing, is learning when to sell, really. So to answer your question in a long-winded way is that we don't have a lot of cash. We don't need a lot of cash. We have access to cash if we wanted to. We could raise money in Orecap if we wanted to at any point in time. So we don't need a lot of cash. I like having big, bulky positions in Original, XXIX, Awalé, American Eagle. I mean, look at those. Those have run. The last two, American and Awalé, fantastic 2 weeks, which is exactly what I'm waiting for. Original and XXIX and others, those haven't had their real run yet, but they're going to have, so I want to hold on to them.
Well, you and I participated, I believe, in the same financing for Awalé, which was 12 cents. It's a 10x. It'd be prudent, I think, for just about anybody to sell at least take some capital off the table, or even sell a lot after 10x. Is that something you're going to be doing?
We sold a little bit. So again, going back, I think we put in 1 or 1.25 for more. I think it was 1. We put $1 million of Orecap capital into Awalé. You're right. It was at 12 cents. It was just in May. It'll be 3 years. Of course, with that, as you well know, there's a half warrant at 20 cents, which is well into the money. It's a nice little sweetener. We have lowered our position in Awalé, not because I don't like Awalé. I like Awalé very much. However, I think we sold maybe $500,000 worth, and this is probably going back, 2-3 weeks. And that's largely to do two things. One is we want to finance our warrants are coming due. So we got to write a check about $800,000 to pay those warrants. So that cash has to come from somewhere. It'll come from proceeds of selling some Awalé shares sold, but we're going to reinvest, right? So the other aspect is I do want to take the long-term goal is to have our positions below 9.9. I don't really want to be reporting every day, that we have to sell. So I think it's also prudent to trim the position back so you're not overweight in anything in particular. I think prior to recently we were, 13% of Awalé, and now we're just at 9.9. We're very comfortable with that. Bigger positions that we have in XXIX and Original, when they're stabilized, we'll look to go again. We'll look to pare down to 9.9, where we're just sort of below the radar. But I think in any transaction we've done, and you call it intra-company within the org group, I think we've sold very responsibly. It's like I don't sit on the bid, never. Like we almost never sell into the market. We look for blocks. We look for strategic opportunities. We act responsibly, and I don't think we have to, right? Like, Orecap shareholders doesn't owe anything to Awalé. It doesn't owe anything to American Eagle any more than you or anybody else. It's a shareholder, and it's in business to make money for its shareholders. However, I think if you act well, those companies will treat you well in return. But the bottom line is just good business, trying to act orderly in the market and not detrimental to your portfolio companies. Because keep in mind, if you're sitting on the bid, I think that's just A, it's not an efficient way to sell, especially chunkier blocks, and B, people tend to lose faith. Well, Steve or Orecap doesn't like American Eagle, and that's not the case. But sometimes you need to liquidate for your positions for strategic reasons or to pay some bills. Or to reinvest, more importantly. I mean, that's what I'm most focused on. As I said, our G&A is not very high in Orecap. Don't ask me what it is, but it's low.
Well, let me ask you how you're going to pay it, though. Do you think you might have to raise, but you might have to raise capital this year? Or you think you're going to pay it?
That's something that we struggle with. Like, do we issue more Orecap shares, or do we sell shares of company X? Right.
So, well, which one do you think is more undervalued? Right.
Well, I think it's easier and more prudent. I think Orecap shares are undervalued more than as much as anything. I mean, that's a very scientific equation that I don't think really applies to the junior mining business, because it is so inefficient and volatile, so much movement. It's hard to really capture the true essence of detailed basis points analysis, if you will. So,
well, but what's your market cap right now, though?
27, if memory serves.
Right. So, and 40 in investment. So you're technically undervalued relative to, and that's only the public shares, right? Right. So you should be selling some of the other shares.
Exactly.
Right.
So that's what we have tended to do. I think. I do think OCI is well undervalued. There are other companies that are similar to us. You look at Kennerland, different but similar. You look at Globex, different but similar. Substantially higher. And don't forget, we have other assets too. We still own 100% of the McGarry, although it's been optioned out 75% to Stardust in a really, I think, interesting transaction. The whole thesis behind that is for Orecap to have investment brought into McGarry to unlock the value. I mean, I see huge value in McGarry, okay? Huge potential. And strategic, that geophysical target, and the ounces in the ground that it already has, and then the infrastructure and the social license aspect. It's marvelous. I'm just sitting on real, I don't know what the right word is, but a real gem. Mm-hmm. Okay, McGarry. And so we still own it. It's optioned out. Stardust is going to spend $15 million to de-risk and grow and discover. And if it's successful, it'll earn 50% of it. And then if it wants, at Stardust option, it has the ability to buy another 25% for $50 million. So back in the envelope, that's putting a $200 million valuation on that one project. And I'm not crazy, Tony. It may seem bold. It may seem like, when the company itself, Stardust, is trading at, or even Orecap, 27 million, and Stardust is $14-15 million. Some may say, oh, this guy's crazy for one project, assigning a $200 million value. Well, I think if we're successful in Stardust, particularly in that geophysical target, which is very interesting to me, $200 million well behind us. That's a big if. Okay, so it's a geophysical target. It's well vetted. It's real. It's couldn't ask for a better location geophysically, geographically, neighbor-wise. Pan American there, Peerless on there, Agnico there. 2 mines for Agnico. It's just like perfect setup. And then even if it's not, okay, let's say if we drill dusters, of which I've drilled many dusters, the enterprise value of that company is $10 million. Well, it has Omega. It's got 600,000 ounces at 2 grams. It's got McGarry, the resources that are defined, so-called defined, 150,000 ounces at 8 grams, right beside a mill, with that's been mined from 10 years ago. It's got a shaft going all the way down that has been rehabbed. Tailless. Mm-hmm. Huge opportunity there. There's anywhere between 37 and 40 million tons. We're in the process of characterizing those tailings now. What does that mean? Defining them empirically. Tons, grade, metallurgy. Mm-hmm. Let's talk about the Kerr Addison, our neighbor. I think that's obviously very relevant. That's where the tailings come from. Kerr Addison's a world-class mine, or was, shut down in 96 after 50 years in production. Back of the envelope, 10 grams per ton. Beautiful ore, okay? And the metallurgy that comes from Kerr Addison, from Gold Candle, private company, the one that's controlled by Peerless on, their own metallurgy, modern metallurgy done on that same ore, the waste, the tailings that are sitting on my project, depending on what type of ore, is anywhere between 70 and 90%. You want to just, again, do back of the envelope. Let's just say, I would say this is aggressive, but let's just say, there's 80% recoveries, which would mean 20% is left in the tails. 20% of 10 grams a ton. You can do the math. That's 2 grams sitting on the Trans-Canada Highway. Now, I'm under no illusion that there's going to be 2 grams of 40 million tons. I mean, if there is, boy, we're in business. So, but like, I think that would be just like the ultimate scenario. More conservative, realistic. I'm not going to get into the grades, but like, it's going to be less than that. Then you got to factor in metallurgy, recoveries, all sort of stuff. But nonetheless, there's a lot of gold there. And it's easy to process. You just scoop it up, put it in the mill, right? And Gold Candle's trying to define a project that will justify a mill. I know for sure that Agnico Eagle is building the Upper Beaver, like it's in production in 27, so around the corner, and there's Macassa right there. So I would suggest that anything's not already in production, the most likelihood of anything actually being extracted economically, irrespective of what resources are non-controlled by Pure or not, are that tailings. Yeah. So there's just so much value in Stardust, which because of McGarry, but also because of Omega. And again, I sort of went around about and started talking about Stardust. But again, the underlying owner there is Orecap, which is trading at the discount to its equity value. Does it sound like McGarry has zero value? I don't think so. I won't ask you that question, but it meaning Orecap will own 25% of it, right? So there's huge value there, and we have other assets. And then I also think it's worth noting that we'll have other opportunities. So Orecap is the mothership. I tend to, just like Awalé, I tend to co-invest with Orecap. So when Orecap puts its capital down, Stephen Stewart puts a check alongside. Why? Because I think it makes me put my money where my mouth is. I think investors like to see that. And two, I want skin in the game. I want more torque. Yeah. So the whole essence of Orecap, well, there's a number of reasons. I shouldn't, limit it, but one is to invest at the ground level. If you want exposure to the type of opportunities that we provide, we create these things from the ground up, very early stage. Well, Orecap gives the opportunity to do that. And it also gives investors a more diversified exposure to our group. So, something I talked about in Orde, you had, 9 companies presenting, one of which was Orecap. It's a lot. Say you're just a guy and you're in the tech business, or you drive a truck, but you love this business, and you can't really understand the technical details from Mr. Chubb. So it's like too much. I'll just buy Orecap. So it's just like it's a set it and forget it. Maybe it's an easier an investment decision for somebody to have a more slow and steady. It's something that has more risk. Not to say that Orecap doesn't have risk, it does, but I would say it's far less risk than any one company and having a drill program and so on and so forth. So it's just a different beast. At the same time, for us, it's a tool. It's a tool for us to enact new opportunities. It's also a tool, as I said, it's an investment issuer. So I can buy and sell securities of arm's length companies to build positions. I am building positions in other companies that are not or group companies that I view as undervalued. And I'm not a fund manager. I'm not interested in speccing out, and flipping for 2x. No, it's because we view opportunities to take the company over, or strategic consolidations, stuff that we've done many times over that are sort of track record speaks for itself, and the type of transaction we look at, which is actually quite wide and varied, but it's a wonderful tool for us outside of being an investment expression that people can come into. So to have that investment issuer designation has been helpful.
The undervaluation that you talk about, is that a feature or a bug? Is it a feature as in, I could buy now and I'd be buying undervalued shares essentially of companies like American Eagle and Awalé and so on. But is that going to be a permanent thing, or how do you even solve that?
It's permanent. I think it's likely there'll be a permanence to its undervalued relative to NAV, its valuation relative to NAV. I think that feature in, call it, things that would be described as holdco is, I don't want to say universal, but commonplace. So let's just assume that's correct. Where I think the opportunity is, like Orecap, we're about to close on the Kirkland Lake Discoveries transaction, where we sold Murado, which we got zero value in, and in return received 19.9% of this company, which is totally arm's length to us, but is the largest landowner in Kirkland Lake, where all these assets I'm talking about. So we and that's about $11 million mark to market. So that is completely not reflected at all. Like our share price hasn't. In fact, we're down since we announced that transaction. So and that's real equities, right? Like it's not an inside deal. That's not a sweetheart deal. That was a totally arm's length deal. And that at the time, that's half of our market cap in a new issuer. And I think, run by a young guy by the name of Stefan, who's here today, I like them, backed by the other guys behind, like Denny and the other guys at Newfound Gold. So like good geo, good guy running the show, and some good capital markets guys with connections who brought in Sprott, McHugh, and so it's a real company with great zip code. So that hasn't been reflected. So I think that's an opportunity to re-rate. I don't think it has reflected the re-rate an American Eagle and Awalé's had in the last 2 weeks. I think, boy, if we can hit it on Original, which is a very exciting opportunity. Peter was speaking today. They're just about to drill. If its thesis is right, our position, which is about, we were 19.9, but they did a financing. So we're, not quite at 19.9, but we've got a big chunky position there. If he's right, that's going to re-rate. So I think there's a re-rating in all of our portfolio entities possible. Then again, XXIX. What a value opportunity there. And I think we do have, I forget the percentages, but a very chunky position there. So there's all, and then Metal Energy, we have a smaller position there, but I'm excited to see what those guys can pull off on that drill program, which again, all of these things are fully funded. These are not dog junior companies that are going to do a financing. I think we're pretty much financed across the board, ready to go. So some are going to pan out. Well, I hope some or one pans out. Not all of them will. They never do. But, we pivot. Metal Energy, talk about pivot, right? Started off in the nickel space, acquired a nickel asset, spent a bunch of money, drilled out a nickel deposit. Everybody hates nickel. Nobody cared. We pivoted to Highland Valley. We acquired a wonderful land package, which is the entire southern, western, and eastern flank of the Highland Valley. Geology is coming our way. We've already drilled it, or I said the previous generation of management had drilled it. It's there. Just needs more love, more attention. We've been unsuccessful in getting the permits, so we just haven't been able to do anything. And then we pivoted and went into NIV. Too close. And it's been so far a wonderful success. Now we've got some work to do, and it's never been drilled. But I would suggest the fact that Charlie sees something, our side sees something, Centerra sees something, Tech sees something. Does that mean it's there? Not necessarily. But it's about the odds of mitigating your risk, so that could pan out. So there's a whole bunch of, do you want to call them lottery tickets? No, they're not lottery tickets, because they're well curated, well vetted opportunities that are run by high quality people that are financed. So that's the business we're in, and that's what Orecap presents.
You and I should do a deeper dive on everything that's going on, but I know you have the YMP event and you've been working all day since this morning, so I'll let you go.
You two have been doing a great job.
I'm just asking questions. If that's work, I'll take it.
Well, look, you do a good job at your work, you and your wife, and we appreciate the interview. And I thought Our Day was a great success, so expect us to do it again, not just the PDAC, but maybe we'll come to your neck of the woods.
Please do.
In the not too distant future, and you can host us on the other side of the pond. What do you think about that?
We will. Yeah, I'm looking forward to it. Thank you so much for doing this, Steve.
Thank you, Antonio.
And that was it. That was Our Day, actually. But there's a bonus here at the end, because it's time to hear which companies Tom Woolrych likes and why he likes them.
Geo Alpha. I'm Tom Woolrych. I work for Deutsche Rohstoff. We have a lot, 350, 400 million under management. At the moment, we're German listed, the DAX. I asked the discount question because we trade at a discount as well. So buy the stock. And Geo Alpha, I developed the concept 3-4 years ago. So I was getting my ass kicked by another phone call. Is it Eric Sprott? I was getting my ass kicked by people investing in Mag 7, and no one really cared about metals. So I wanted to find out a way that, where can a geologist have an edge? Where can they make money? Where can they start to outperform things like Mag 7, which is probably still impossible. I haven't checked recently, albeit we've all had a pretty good 25 and a really good start to 26. So what I came up with was, okay, I'm not going to be able to trade in the market. I'm not going to be able to do some sort of quantitative high-frequency trading. But what I can do is I can be extremely early into discoveries. I'm going to show in a few slides' time that a lot of the gains are made in the first two stages of the Lassonde curve. So that's where I was going to focus. The commodity beta part of the equation is timing. Yep. Buying gold when gold's low, buying copper when copper's low. Basically still haven't sold any. So the question is, when's gold going to top? Copper feels like it's got a long way to go still. So Geo Alpha, the market caps and discoveries are small. They can have a low correlation to the overall market, which is positive. Snowline Gold was an example, essentially made during a bear market. It's now help me out, Craig, 3.5 billion market cap. I met Craig and Scott when they were trading for about $40 or $50 million. The discovery stage is extremely liquid. You should size it accordingly. You can't take big swings in these names. A lot of the companies are a tenth the size of my fund, so I can't be big in them. Hopefully they grow. What else? They're extremely volatile. So the way you get around volatility, and I think it's Antonio and I are going to talk about it later, is by having conviction. It's something I talk to Gabriel Gruner almost every day on. The way to build conviction is through understand the geology, looking at the drill hits. The frequency, so the success rate, it can actually be better than 10%. I put that back then because I wanted to make sure management at Deutsche Rohstoff understood that we were going to take lots of swings and have 9 out of 10 dusters. Okay, so Geo Alpha. It's not actually, burly, attractive Australian men running around the bush. It's about the rocks. The reason I say that is because a couple of times more recently, people have come up to me and said, "You're the only reason that stock's gone up," and that's actually anathema to the whole concept. It's all about the rocks. It's all about the drilling. So if you think I'm just bumping a stock because I want the share price to go up, you're wrong. I'm talking about a stock because I believe in it, and I think they're going to end up being mines that can be bought. So the famous figure, this one's from Visual Capitalist, the Lassonde curve. You all know it. You've all studied it. It works. Now, how can you improve on the Lassonde curve? Is that cut? Yeah, you can kind of see it. Like I was saying earlier, the first two parts, through conception, exploration, and discovery, is where all the money is made. You can see I've intentionally made the back, what is that, 4/5, 2/3 of the Lassonde curve a lot flatter. You can start like Stephen and Charlie and the guys at All Group do, with a $5 to $15 million market cap company. You can make a discovery and that could be worth $3.5 billion in 3 or 4 years. So that's the part of the Lassonde curve of the discovery that I want to play in. And now another concept that I've been playing with and been talking about publicly is adding the third dimension to the Lassonde curve. So that's where are we in the cycle? Have we got commodity tailwinds, headwinds, whatever it might be? So you'll see there's 3 curves there, and I was vibe coding last week and managed to vibe code a Python script that demonstrates the third dimension of the Lassonde curve, so bull to bear. It's not a flat, it's not a 2D thing. If you think about the Lassonde curve in 3 dimensions, it's going to help with your sizing, it's going to help with your conviction, it's going to help with liquidity, and you'll be a better investor. So some examples, Snowline Gold, it's everyone's favorite. So I feel like I should start with it. It's also the largest market cap. This is going to go from highest to lowest. Snowline is at 2,000% up since July 22. You can see the market cap's 3.3 billion. I think it's a little higher. That's just because the shares outstanding are always poorly reflected in these programs. And down the bottom, you can see where the guys have raised money or added shares through vesting warrants. So this is going to be the interesting part. I want this, okay, it's going to work. So these are my leapfrog models. This shows the famous valley. I take all of the drill intercepts that Scott and the guys publish. I don't have surveys, so I just plot them in straight lines, and I build independent models. I knew years before the resource came out that this thing was going to have I actually think it's got 10 million ounces in it. So there I am just spinning it around just to show the continuity. It's remarkable. 600 meters long, 500 meters wide. I think I'm going to go into a slice here and show you how deep it is as well. 500 to 700 meters deep. It's got a bit of a westerly dip and plunge to it. That bottom left side might be too high a strip anyway, so I guess they're going to start looking at going underground and chasing that. Remarkable continuity. Can you see the grades? Oh, you can. So you got a better screen than me. So pink is greater than 2 grams. So there's chunks in there that are high grade. So this is the block model now using a 0.7 cutoff. It's 195 million tons at 1.3. So that was all done independently of the company using public data. What do we got now? We Are Gold has been a dream run for me. I first saw it when it was a soil anomaly, a bit like MERG, extremely continuous soil anomaly in Namibia, ASX listed. I think it's the only ASX one I've got in my picks today, so you Canadians will be happy about that. It's 1,000% gain. It's going to be capped at 760 or 80 Aussie, extremely cheap, 3 million ounces, 1 gram open pit. It's an engineer's dream. Every section's 40 meters at a gram. The strip is 6 or 7 to 1, so it does get deep. I'm going to show you in my next video that there is the underground potential. There's the soil map from 22, I think, that got me excited about it. Pierrick, the geologist that runs the exploration there, put in some really good trenches, 60 meters at 1.5 grams type stuff. And then he went mad drilling. Namibia is an awesome place to develop a gold mine as well, because it's kind of the middle of nowhere. It's reasonably dry. This is all the drilling now. I'm going to show the drill intercepts. Everything, all the blotches you're seeing are greater than 0.5 gram per ton intercepts, and they're wide, 20, 40, 60, even 80 meters wide at times. Extremely continuous. There's a pretty juicy one. 50 meters at 12 grams. So this thing is falling into the sort of the orphan period of the Lassonde curve, but we're in a gold bull market, so I don't expect it to go down too much. In fact, I expect it to get bought and put into production. So I'm now going to turn on the pittable block model. There's 3 million ounces in that. And the unknown bit is that bottom bit with the orange and reds that I just turned on. That's the potential underground. So they want to mine the pit at about 177 ounces per year for the first 5 years. The underground could contribute another 50 plus thousand ounces. Then you're looking at a 250,000 ounce per year producer, which is going to be extremely attractive to any mid-tier or major. Q2, That's a Canadian lithium play. It's already 800% since July last year. They optioned, I think they optioned it or joint ventured the Cisco project, and they've been putting out remarkable lithium hits over the past 2 years. So what I'm showing here is all the drilling chopped by a rough pit. I just use a series of 45-degree surfaces to intersect the ore body. The lithium intercepts are world-class. They're remarkable. They're going to put a resource out in a couple of weeks. I expect it to be high 2s or even early 300 million tons at 1 to 1.2% lithium. It's 1,100 meters long, 600 meters wide, and I'm going to show some of the drill intercepts, hundreds of meters at high grade, as high as 1.6% lithium over hundreds of meters. And you can see actually where the pegmatites are broken up. It's very narrow. That'll just get mined as a big old pit. You can see there's a 2%. Anyway, you guys get the point. Andina copper is one that I've been active on for a little over a year now. It's a porphyry in Colombia. 4 holes in, extremely exciting. I was there on site with Gabs 3 weeks ago in Colombia. It's kind of also the middle of nowhere in a steamy part of Colombia called Choco State. Places crying out for development. Politics are improving in that part of Latin America. So we were confident to take a big swing. We own over 5% of this, of Andina, and currently capped at a bargain, 230 million. With recently, you can see my note there, they've gone up to 270 million shares out, capping it at 270 million. So what do I like about it? Like I said, 4 holes, it's extremely early days, but every time they drill, they're getting, in quotes, ore grade hits. Ore is by definition economic rock. We don't know that it's economic yet. There's not a study out on it, but if you compare it to their competitors, they're, in quotes, ore grades. So of the 4 holes that they've drilled, I don't know what I'm trying to demonstrate there. Okay, so that's hole 6, which is you should be keeping an eye out in maybe 4 or 6 weeks' time. And I'm probably going to show you hole 5 as well. Anyway, hole 5 is the one that's shooting down to the south. So the known area is 380 by 600 odd meters, 580 meters. And what the interpolation and leapfrog allows you to do is add a bit of blue sky, right? Add a bit of add a bit of hope. It could be as much as 1,200 meters long. That will blow out even further if hole 5 and hole 6 intercept. So you're probably already doing the mental arithmetic. 600 by 600 by 500 deep. The specific gravity is going to be 2.6. You can already see these are big tonnages. Several million tons of contained copper, and you can get it all for $270 million. If this thing pans out the way I think it's going to be better than Marimaca, could be as good as Solaris, Warintza's deposit, and we've got all that ahead of us. San Lorenzo Gold is Al here. I saw Al earlier. Al's become a very close friend of mine, and it's been through funny stories. Please watch Rob Sin's videos from Rob and I talking about it a year ago. Very funny. 1,600% gain so far. It's still extremely early days. Capped at 270 Al. That's probably wrong because we just did a raise. Let's call it 300 million. Why am I excited? So this is in Chile. This is next to the El Salvador mine. It's next to an airstrip. It's next to a, what do you call it, a village or a town. I've just zoomed in on the Cerro Blanco target. That's the kind of, that's probably the target that made San Lorenzo famous, made Al famous. Hundreds of meters intercepts at 1 gram ton gold. You can see that it's structurally controlled. I just turned the topo transparent so that you can see the way the interpolation at depth intersects those veins that you're seeing at surface. I think the thing does come all the way up to surface. You've got so far, roughly 5 separate structures that are mineralized, all in that 1 gram sort of range, all targeted on IP. There's been no sort of systematic step outs off those yet. That's going to be the next thing that I'm going to be pushing out to do, is just hit it hard with the RC rig. 100-meter grid, just drill the hell out of it. That thing I just showed is the original Arco. Now this is important. This is a hit that Al put out last night post-market. We don't know how the market's going to react to this. It's going to open on Monday. This is a long, we don't know, but in quotes, porphyry hit. If you ignore those gaps in the intercepts, it's a 330 meter long mineralized section. Congratulations, Al, honestly. It's a remarkable story, and I'm pretty sure this is going to pan out to be a discovery, a mine. A lot of drilling left to be done. Al tells me he's excited about this southern part of Arco as well. A new target, I think it's Santa Maria or something like that. They're drilling it now. Results from that will be out in sort of, let's call it 8 weeks. So we'll know what's happening there. Haven't even scratched the surface in terms of Tres Amigos, Caballo Muerto, and Caballo South. So those are, any one of those 4 or 5 targets could be mines. They could all be mines. Let's see. Awalé. So we heard from Chubby already. I've known Chubby now for, when was the big hit? I probably met him in May 24.
I'm sorry, Tom, can you say that again? What did you call him?
Chubby, Chubster.
Okay, that's
Chubovich.
Fair enough.
Chubastan. All of them. Andrew. That's an Australian. He's Aussie, so he gets it. Australians don't use Christian names. So they had a remarkable uplift, 500% over a couple of days. They released the BBM and Charger discoveries. The market, I don't want to be unfair here, Andrew, but the market rightly said, okay, well, that's 70% a Newmont discovery. So how do we needed to do some price discovery. The gold market, admittedly, also wasn't in full swing quite back then. There was probably just an intimation that was going to happen, and they had a 50% drawdown. Andrew wasn't, he didn't let that get him down. He kept on drilling, he kept on putting out world-class hits, and I actually think the hit that they put out last night, which I'm going to show here, this is Al and Andrew caused me a lot of stress last night and this morning trying to update this presentation because, these are basically, you're seeing these live hits. 1,000 meters down plunge. I think it was also 1,000 meters long strike. There's the hit there. Remarkable, thick underground grades. BBM, he was guiding 1.5 million ounces, I think, in his talk. I'm seeing that as well. 20 meters thick, so it's fine for an underground mine. The pit's probably going to be difficult because of the strip, but if you've got an underground component, just go underground early, save the strip. I'm going to move to Charger here as well. Okay, there's a nice hidden section. All pink. That's what you want to see, greater than 2. I think in this case it's greater than 2. It's not shown. So Charger, come on, Tom. I wanted to do this live relatedly, but we didn't have the tech for it, so I made these little videos for you.
Shouldn't it be Tommy, though? Can we call you Tommy? Because you call him Chubby, so that's fair, right?
Tommy, Al calls me Tommy.
Tomstein, is that good?
Tom is a nickname. My name's Thomas, actually. My Christian name's Thomas. So there's the famous Charger, high grade. You can't see it. 1,000 meters deep. Okay, I know, 500 meters deep. Where are we going here? 100 wide, and it's also in that 10 to 20 meters thick. So again, you can start doing your own internal resources, working out, you stick the ounces in BBM and Charger together. They really are the most advanced targets. What I kind of like about them is they're not really tier 1. They're not really Newmont-style deposits. So if Newmont say, no, you guys can have it back, we're not interested, that's going to be massive value being fully attributed all back to Awalé. So I've been saying to the guys, please get a deal done, get out of this horrible joint venture, and we'll see if they can get that renegotiated or whatever it's going to be, because there are real prospects there. And Fremen is 100% theirs. That's why I asked the question. I think best hit so far, 20 meters at 2. Should that 20 at a gram? Yeah. So that's already, and like Andrew said in his talk, the original RC lines were 600 meter spacing, so you could fit several mines in that gap. They need to infill it and find the sweet spot. Fremen is 100% theirs. Could be a lot of value there. Metal Energy. So I don't have a sexy leapfrog model. I was honored to get a phone call in the last placement. I think there was only 3 parties in the placement, Tony. Is he there? Or Stephen? Can confirm.
2 major parties, 3 or 4.
3. So five groups. It was a pretty easy yes. And it's because of this. Coincident, it's exactly what a geologist wants to see. Coincident gold and copper with the geophysics. So any of these data layers, any of these layers on their own don't really mean anything, but when they start stacking up, when they're coincident, that's when it starts to really get interesting. When the geophysics starts to help the narrative, being told through the geochemistry, then it's really something. Charlie explained to me also that the gap in the geochemistry is probably because of the valley, right? So he's not here either. So ignore the fact that there's a valley there, and that whole. He's right. So the new slide is 5.8 kilometers. That's the length of the license, the trend. So that's the figure they sent during the announcement of the acquisition. But the geochemical anomaly is 3.7 kilometers long. Okay, so special mention. How am I going on time? You haven't been hassling me.
No, you're fine, because we're going to do the quiz right after this. Charlie's here, by the way.
Oh, there he is. He's behind hiding.
Would you call him Chachi, or would you call Charlie?
That's an easy one. American Eagle. So, honestly, Tony, congratulations. We've been sparring for 2 years, maybe now, 3 years, and it's been a lot of fun. You were right, I was wrong. At least in terms of the market cap and getting money in. So Looking forward to seeing what you can continue to deliver there. Hercules, Chris Paul's here. He's one of the top CEO geologists out there. He's swinging big, he's drilling big step outs. He's super talented. The market's completely abusing his company. I have no idea why. Support him because so Leviathan is admittedly, it's large, it's lowish grade, given that it could be quite deep, but there's just so much copper in that part of Idaho. Chris has now basically stitched up the whole belt. He's exploring hard. He's drilling new targets like Southern Flats and Donuts that are super compelling. Let him do his work. There could be billions of dollars in value there. Ongway is it's another weird gold essentially. It's been run by Hired Down and Dave Underwood of Asino fame. They've picked up essentially pre-drilling, some drilling gold in Namibia. Have a look at it. Super exciting. So that's about it. I think I own all of those, so yeah.
There was an Italian 8 minutes, which is like 38.
Okay, there you go.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks, or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."